All right. Good morning, everyone. Welcome to the Humor Performance Lab. And we're just going to get right into this. Um, I'm still stuck on the 23rd. So I'm going to be replaying the 23rd again first thing this morning. But then I'm going to go back onto some other days um, just so we can switch it up a little bit. But this day, I need to be much more consistent with it. And so I have an idea, and I love waking up in the mornings with trading ideas because it tells me that when I was sleeping, I was probably dreaming about trading. And if I'm dreaming about trading or somehow it's coming to my mind while I'm sleeping, it means that it, it's a test for my focus, right? And what we focus on can manipulate the body to act. And when that happens, we can start taking action aligned to the intention. And so when I'm dreaming about trading or I wake up in the morning and I have some form of idea, it means that I'm well focused on my craft. And the more focused I'm on my craft, the higher the probability that it will start to manipulate the body in the moments that matter the most. And for me, the times that matter the most are the times that I am trading live. So we're back into the 9:30, and what we have is our areas here. And what I really want to focus on is just this session trading around my actual areas. That's it. I'm not going to try to scalp the session. I'm not going to try to do anything else in that context. I just want to see what happens on this particular day. If I just go in and I trade my areas, and my areas are already set. They're set the same way that they're always set. So it's nothing special. I didn't do anything crazy, right? I have my low volume nodes and I'm looking for long positions. All right. And then the short positions, because of where this market is and what it's doing on the longer time frame charts. Okay. And what I mean by the longer time frame charts, I'm not talking about indicators. I'm not talking about anything else along that context. I'll bring the chart over and show you. Um, what I'm looking at is just how the bars are forming and how they're closing. All right. And if you look here, we've got strong closes and we're moving through this area of support. Okay. Which means that we have an inclination right now to the downside. That means that we still need to take our areas out of the long positions, but because of the way that the longer terms are forming, we can scalp the long positions. And then what do we do with the short positions that are in our areas? We go ahead and we take those positions and we don't scalp them. We look for coming back down into our areas to give us more of a room in direction of the longer term charts. And what happens if the longer term charts are telling us long, like up bars like this, and we're coming out of our areas like this? We do just the opposite. We can scalp the short side if we're in an area like VWAP or something along those lines, but we're trading out of this area with our long positions, anticipating that we're going to move in direction of the longer term charts, and we're going to move up into value area high. So on this particular day, okay, we're showing long on a short term chart and we're showing short on a long term chart. All right, two different things. And so what do we want to do in that context? We want to be careful on the long side going against the longer terms. When I'm saying longer terms, I talk about a 60-minute, a 2-hour, a 4-hour, a daily. Okay. And then we want to scalp in the direction of the composite on the 30-minute. Why? Because we're still looking at those areas for response, but we haven't flipped yet our view of the longer term. And until we do, we want to be careful on those long positions. All right. That's what's going to keep us out of trouble if there's a market shift to the downside. That way we don't continue to try to catch a falling knife when the market is clearly going down and going down heavily. All right. We can still take those long positions, but we want to put them into a scalp. So our profit targets are tighter and our risk is tighter. And I'm going to see if this allows me to be a little bit more consistent in terms of what I did live comparatively to what I'm doing in the live streams. That's what this is all about. I'm trying to find that consistency. So this is the open the market. We're not going to try the open the market, but wherever you can tell here, right? We're already in the area. What we could do, just in terms of practice, right? We could turn around and say, okay, even though this is the open, let's go ahead and buy this out of the area as quickly as we possibly can. All right, we're in a $420 risk right now in the position by doing that. So what can you do in the context of limiting that risk? Lower your position sizing, even just to 1 micro, something like that, because if this market goes, your risk is extremely limited in the position. Okay. And if you have extremely limited risk, you can move this down. I mean, take off 4, right? You're looking at $105 risk in, well, $104 risk in the position, right? $104 risk in the position. Almost any person can stomach that, right? Where are we looking for price action to go in that $104 risk? We're looking for it to go to at least 745 or 817. What are those 2 areas? Those 2 areas are value area high and VPOC on the daily on the 30-minute chart. Okay. Why would we be looking at price to go into one of those 2 areas? Because those areas, more volume is traded. Okay. And it's also the range of where 80% of all the volume is traded in the context of the custom profile since July 17th. Okay. And so price action is probably going to act like a magnet to one of those 2 places. Well, if we can get in here around the 94 and we can go up to the 142, okay, that's over 50 points. All right. Right here, we're risking what? 41 to 94, we're risking about 50 points. That's a 1-to-1. Okay. And if we can get into the 814, that's over 100 points. It's over a 2-to-1. So if you're risking $104 and you're looking for that possible 2-to-1 risk reward right out of the open, and you're coming out of an area like this, I don't see any problems with it. I don't see that it's gambling. The reason why I don't see that's gambling is because you're already in the longer term area at the open. Anticipate volatility coming in. Anticipate directional market action at the open. Why should we anticipate directional market open or directional market action? Because we use the opening range to determine initial balance for the day. Well, if there's no reaction of price at the open, then why are we using that time frame to define initial balance? We're using it because we're anticipating some form of directional move, something, right? So let's put that into context. So that can be the first position of the morning. Now, don't do that if you don't have an area, right? But if you're in a clear area on your longer term chart, not an area on your short term, right? Don't get this mixed up. If you're in an area from a longer term perspective, and it makes sense in the context of your daily perspective, absolutely, you could enter a position off of the open. Just be careful. Put your stop in, right? Reduce your position sizing. Reduce your risk through your position sizing. How do you reduce risk? You reduce risk through position sizing. How do you reduce volatility? You increase your time frame. It's the same thing. Time smooths out volatility. Position sizing decreases risk. I hope that makes sense to everybody. And, if you're I'm in 420 right now, 420 risk, right? Basically already a 1-to-1 risk reward ratio, coming up into like the 380, 366, right? I'm waiting for this high to break. If this high breaks, I move my stop to a break even. I'm not going to take any more risk on the position, but I really want to see this high break, because until this high breaks, we can rotate back down into my area. And I really want to hold the area, because if I get stopped out while I'm in the area, someplace in the area, that's not going to be good for me, because now I have to find another entry point. So now we break it, right? Stop immediately, break even. Lock in $30, free trade, free money. There's no way you can take any risk on the position now. Even if it snaps back against you, you're still going to be out with $10, $20 in revenue. Okay. So there's no way that you can have an expense. And now we're going to try to ride this thing all the way back up to the 812. All right. Let's see what happens. We have VPOC up here, which is another area that we can take another position out of on the downside if we get up into that area. And where's that at? 29,000. So 29,000, and we're looking at 2817. We'll be out way before that happens. So now, and the reason why that's important, it's very difficult sometimes to be in a long position and trying to find a short position, or vice versa. Okay, it can be very difficult to do that. So if we're going to be looking for an area where we're going to be short, we already want to be out of our long position. The reason being is that way we don't have that issue of, well, should I be short? Should I be long? Or what should I do here? Right? We don't even have those questions. We're way out of the long position way before we would hit that area before we're starting to look for short positions. All right. And again, the only reason why we're looking for short positions off of that VPOC is only because of what the longer term charts are telling us. And here's where you get into confluence of the longer term charts. See how we're starting to show rejection down here on the 1 hour, right? That's still telling us that a potential rejection point can come into the market, right? Maybe shorts aren't the best thing to do. Well, don't just look at the 1 hour. Bring up your 240-minute chart, okay? Your 4-hour chart. Look, we're still below. We're still below the we're right around the 1/3 of the bar, right? This would be expecting a pullback into this area. Still bearish, still looking down because sellers are still in control of that time frame. All right. So when you're looking at multiple time frames, put that into context. Always want to be moving in the direction of the overall time frames. Okay. And what's going on the daily perspective on this particular day, we have a gap. All right. The gap could fill up here around VPOC. Can you guys see this? No, you can't. I have to move it up. Sorry. I'm talking to you and you can't even see the chart. I apologize. Okay, so price action can gap down, right? We're in unfair lows. Price action can absolutely come up here into value area high. It can come up here and test into VPOC, and that's really kind of closing the gap, right? So we have the two different things, scenarios that can happen, but what can happen when we're in unfair highs or in unfair lows, excuse me? We could find rejection in this area and retest the lows, okay? And when our longer time frame perspectives of our 240 and our 1 hour is telling us that we can look for potential short positions in these areas. And look, we're at VPOC already. We just moved directly to VPOC in this move. Okay. So now, and that where's this area? It's basically taking the area of VPOC into a short-term time frame and looking at the high volume in the context of a range that we've already tested into. So we've gotten through VPOC before, right? We're back into that range again. What can we anticipate now that we have this range here? Possible rejection to the downside. This is where we can start looking for a potential short, and we already know that the 4 hour is telling us that we should be we should be looking for possible short positions. So I'm going to move my stop up here now and lock in at 626, right? I should have been a little bit more aggressive on this coming into the area and picked up a little bit more profits, but look what I'm going to do. I'm going to scale this up as we're coming back up here, adding in profits to the position. I almost added in another $100 there in profits as the market was coming back up to test back into the area. You see what I did there? When you're scalping or you're looking at an area for an exit, do everything you possibly can to pick up every single extra tick that the market's going to give you. Don't hope and pray that it's going to break the high. You're in one of your areas. Look for a reason to get back into the market. We have VPOC right above us, okay? We're still just kind of hovering here. I need to wait for some form of confirmation to look for a short up here around the what area would I want to go short? Around 801. And then if I can't get into the 801, it's around the 791. I don't want to do it yet because we can break this high right now. Thank you, market, for doing exactly what I anticipated you to do there. It's like right on cue. Why was I anticipating it to break the high? One, the higher volume up here. Okay, when this bar was created, we closed in the above the 50% range of the bar itself. We have delta that's coming off as we're coming up into the open of the bar, and we have an area of VWAP right above us. I think that's the first standard deviation. Yeah. And so that's all I'm doing there. Nothing crazy, nothing anything else, right? That's it. Dow is back to where it was before. Absolutely. 100%. We're in a rotational market. We're not in a trend. We're rotation. And when we're on rotation, the market's going to revert back to the mean. It's going to go right back to where it was before. That's what we should be expecting. This is why trend following methods don't work well in ranged market conditions. And it just so happens that the market's in a ranged condition, in a balanced market condition, much more often than it's in a trending market condition. Trending market conditions, the market's in a trend 20, 30% of the time at best. And then the rest of the time it's in some form of balance or consolidation. What's the difference between balance and consolidation? Balance is wider, consolidation is tighter. It's like volatility. What's the difference between volatility and momentum? Volatility is moving so fast that you can't react to it. Momentum, it's moving fast, but not so fast that you can't react to price. Now, if I can get a qualification here, I'm going to go ahead and get into a short position around the 827 area. I don't want to just short that area right now. Okay, we're still showing strength in our shorter time frame charts. All right, we're still showing that our longer terms are still looking at the downside. A little bit closer now, moving into the possible continuation to the upside, but they're still there. Now this is a little bit different. We're starting to show some rejection here, which is perfect, right? If we're starting to show some rejection or some acceptance to the upside on a longer terms, this is what we do. We know that down here in this area, we don't have that. We have looking more for a continuation play. So what do? We wait for price to come up to the VWAP area, okay, then come back down into initial balance wherever it's at and look for a long position because we're back above looking for longs in the longer term charts. If we get back down through here, we can then turn around and look for a short position. All right, we don't have to be in at the edge. You don't have to be in at the edge. And I just drew that on the wrong chart. I apologize. Let me draw that back in for you guys. If price action goes up above VWAP up here, right? Then we can look for down move into the initial balance range and looking for a long, okay? If price action comes back down through this area here, we can turn around and look for a short like that. Most individuals, I don't mind coming in here and saying, oh, we got these signals and stuff like that, but Made by Matt, come follow me. Love every morning, come join Asia Time too. You're coming into a competitor's stream, talking about bringing people in from that stream, and you've delivered nothing of value to create that. Why in the hell would anybody listen to you? Thanks for playing. If I knew how to, if I, most individuals, I don't even care. But you, oh, if I had the chance, if I knew how to, you would be blocked right now. And you are going to be blocked from the channel going forward because that's too much. You're too much, my friend. Too much. You went too far. So price action is coming down now, right? We didn't quite get into that pullback into the, oh, what is it, the 870 area for a possible entry there. So we're going to wait for another setup. We're still looking, 60-minute is now looking more like a long, but we're still looking at the short side in the 240-minute chart. We're at 946. I'm going to go ahead and put a limit order in for a short here just in case we get that pullback. I don't think we're going to. And I'm not even so sure that if we got the pullback now that I would want it, because that would be creating a lower low here. We have less sellers coming in. We got more buyers coming in. This looks more like buyer absorption down here at this low than it does looking at continuation to the downside. But we're still holding the area. We're still holding the area here. And that 240 and that daily are looking pretty good right now. And the 30-minute is coming off of a higher volume node from this area too in value, which is a good sign as well. I'm going to go ahead and see about initiating a short from up here. And I'm only going to do it because the risk is really tight if it does go against me. I'm risking $140. $140 to come back down into what? 705 from an 869 area, almost a 200-point move. Threaten me with a good time. Almost 200 points and you're risking $140 in order to do it up 4 contracts. Let's play. That's worth it. So I'm going to go ahead and keep that there. See if it fills me or not. I don't think it's going to, the way that the price action is reacting here, right? And I like the lower volume here off of these lows as well. I do have VPOC above me. It's the only thing. I have VPOC above me. And if I put a stop up here above VPOC, what would that be? 1134? No, too much risk. So we could get out with a small expense of about $104 if it breaks through those highs. It comes up here and fills us and immediately breaks those highs, come up to VPOC, but that would give us another entry point at that point in time. So let's go ahead and just leave it where it's at. We're back down here into this area. So now if we come in, have a pullback, we have reasons to enter into a short position down through here as well. And this is a little bit more comfortable of a position, only because we're through support and the 240-minute chart is looking much more bearish than it was a few moments ago. And we're about ready to close or get back to the open again of the hourly chart on the hourly bar itself. Tipsy, yeah. So the contract is the mini NQ. Oh, you can't see it up here, can you? There you go. There's all the information you need right there. Or sorry, not the minis, the micros. I'm trading the micros. I'm sorry. It's early on a Sunday morning. I'm mixing my words up. I'm trading micros, 4 micros in the NASDAQ. Minis, I can't control inventory very well with minis with the risk parameters of a prop. Trading cash, trading in my cash account, 100%. But trying to trade these minis with the Risk parameters of props is rather difficult. Um, so I'm using the micros so I can trade around inventory. I can do some other things in the context of managing inventory and risk, and using inventory to manage risk. You guys have to remember that's the biggest difference between an institutional trader and here, is how to manage risk. Institutional traders use inventory a lot to manage their risk and their risk positions, where retail traders only use a stop. That's the biggest difference. And this is why retail traders can't develop to become like an institutional trader, because the rules that they play around are two completely different games. Risk managers don't need to be right. All right. They utilize a pool of funds diversified into many different assets in order to be able to eliminate risk. Traders are using a stop. Traders have to be right. Institutional traders do not. It's a different game. So when you're thinking about trading, don't think that you're going to become like an institutional trader. It's not going to happen, because the game that they're playing is different than the game that you're playing. And if you're trying to learn how to play their game in this game, it's not going to work well. Play the game that you're playing. Don't try to play somebody else's game. Didn't get into long position. Didn't really have an entry point there. Absolutely fine. Don't look at these types of moves if you're not in them. Don't look at them as like you missed something, okay? Because there's nothing to miss, all right? There's nothing to miss at all. If you want to get into these type of positions here, learn how to scalp, okay? But if there's an opportunity like this and it doesn't come to pass, all right, don't look at it as you missed something, because emotionally, psychologically, it can mess you up for your next position. Look at it as somebody else's opportunity. Somebody else's opportunity um to profit to whatever, right? We don't need to be in every single position. We only need to be in the ones that matter to us, to our trading plan, to our trading skills, to what keeps us regulated as a trader. The moment you start to feel like you've missed out on opportunities and those type of things, you're going to chase. You're going to try to you're going to chase trades. You're going to try to force trades. You're going to get yourself into positions that are going to unregulate yourself as a trader, and that's when we start to emotionally trade, right? So in that context, don't don't try to force your trading. Okay, let it come to you. Let the market come to your areas, because that's going to keep you regulated as a trader. We get emotionally caught up in a position when we're focusing on that fear and greed, the fear of missing out on something, and the greed of I need to make money now. Okay, and when we take action in the markets based on those two ideologies, that's when we start forcing things, and that's when we start getting ourselves into trouble. And see, we're getting the pullback right out of this area here. Okay, and we're still below the open on the 60 minutes, so I don't want to go long from this, and we're still looking for a potential continuation to the downside on the 240. Okay, so I don't, and the gap, remember the gap on the daily chart. Okay, so I really don't want to go long from this position right now, but I want to watch this, because now we're back up here into the area of where I did want to get into a position. We're probably not going to get in up there, but we could definitely get in from someplace around here. If we get a signal in this area, that would be really good as well. But we're pretty tight in terms of profit target. So if we do that in this area, we're going to need to scalp the position, where here will be less of a scalp. We have more room for it to come down. So let's see what happens here. And I'm going to bring this down just a hair, right below. I would have been filled too from where I was. There we go. Beautiful. Still got filled anyhow. See how that works? It all works out perfectly. And now where do I want my stop? Logically, my stop would be a good place up here. 486, I can absolutely risk 486 being up 750 on the day. I'm not even concerned with that stop. I'm not even like, oh, maybe I should move it. Maybe I should do something else with it. No. And then why for the entry there? High volume. You're anticipating price action to move back into high volume. It treats the price like a magnet. It just attracts it. And then where would the target be? Someplace down here in this area, right down here. And if I have a target down here in this area, I'm looking at 1092 in revenue. So those of you that really like the whole idea of risk reward ratios, and that's meaningful to you, that's still a 2-to-1 risk reward ratio. I don't put as much influence into risk reward ratios as most people do. And the reason being is when you're scaling in and scaling out of positions, risk reward isn't the main thing. All right. And here's why. Because you're scaling in, you're scaling out, you're scaling in, you're scaling out, or you're scalping, and you're just doing everything you possibly can in the scalp to reduce your risk. Every ticket goes in your favor. You're moving your stop in direction of your position, taking risk out of the position. So you're never taking a full risk anyhow, unless the market just immediately comes down and never goes in your direction. Okay. Well, and if you're doing that, then you're not in the right places. Okay. If that's happening to you and it's happened to you frequently, you're not getting in at the right places. You need to adjust your entry criteria. You need to adjust your areas, okay? Because that's what we should all be doing, is trading out of areas that we can anticipate, all right? Areas we can anticipate, because then we know our hunting ground, all right? Now, I'm also going to look down here too at prior, and I'm going to look and see where my high volume is down here in this area, because that's where I'm anticipating price action to possibly come back to. So we've got the high volume down there. We got some little bit of high volume down here. Nothing crazy. When was the last time we were down here? Do we know? All the way back here. Okay. Now, where were we in terms of high volume down here? Do we have any high volume in this area? We should. Oh yeah, look at this. This is probably where price is going to come back to. Let's increase our target a little bit. See, instead of just looking at a 30-minute area, right? Let's turn around and look and see where price has, where the volume is on our shorter time frame charts. That's going to key in a little bit better of what we can be looking at in terms of where we would expect the market to go, instead of just using an area for the 30-minute chart, which is a pretty wide area, right? This is a pretty wide area here. So instead of just using the random first portion of that, let's go ahead and see if we can't pinpoint it a little bit better. Now it's just time, wait and see what happens here. Okay, we have a little bit of a rejection bar here. We did break a higher high. Let's see if we can move up here a little bit. Let's go ahead and get out of the position here, and let's buy 4 more and look for a small scalp out of this position. And we will definitely drop this down into revenue. So if market just comes up without us, let's get out with almost 400 in revenue. Let's do that. I like that. I like that idea. In fact, we're going to drop it down a little bit more to 432, right above VPOC of this time frame. So now we're out and we're in with 4. Okay. Now what we're looking for is a possible continuation play to the upside here. I'm going to watch this pretty carefully here. Okay. We're looking for it to break the highs. We're up 200. We're going to go ahead and move our stop to a break even and put our stop right below here, the high volume. I'm going to move the stop up here to this high. We're up 200, locking up 156. Up 300. I'm going to lock in 200. $362, getting some higher volume up here, holding this area. Beautiful. I don't know exactly what that was, about 400. I think we're up about 500. Let's see how much farther it goes. Breaks a high here. No momentum coming into the market. Now look for it to come back down again. And because of where that bar closed, if we come back down here, I want to be in another 4. We close in the top 1/3 of the position. We have a new bar on the 1 hour. We're above the open on that bar, and we're above the open on the 240 minute too, because we just opened up a new contract or a new bar there as well. And so we're still looking for potential long positions back down here into this area. See the delta that came in here? Strong delta here, which is just fine. That's what you would expect. But you've got your strong delta here, right? But you got your buy delta in here. Price action didn't close between below the 1/3 here. So we're looking for price action to come into here. Long, beautiful. Now we want to see delta rise and price action move above this high. If price action can't get above that high, we want to be out of this pretty quickly. Hey Ram, good morning. How's it going? Okay, price action is not moving above that high. See that? So locking in a free trade here. We still haven't moved above the high. Okay, we came up, nice momentum up to the upside, but price action is not doing what we anticipated to do. Let's get out. Can price action continue to go up? Sure it can. I don't want to participate in that. Why? Because we're testing this area too much. We don't have the momentum coming in here at the highs. I don't want to take the risk. It's a higher probability of this rejection here, since we can't get above this high, that we're going to break lows than it is to break the highs up here. I don't trade by hoping and praying. I trade by what price and volume is telling me what it's doing. We do have the higher volume up here at the highs, but we can't even break the highs up here. So you got to question yourself, is this actually buyers or is this limit order selling coming into the market up here? Now we break the highs. Beautiful. Am I in? No, I took the stab, right? I already have profit from the position. Okay, this position here, I was able to get profit out of it. This would have just been a bonus. All right, my bonus, scratch trade, didn't hurt me. Beautiful. Let's move on to the next one. And Tipsy, what's a contract? Is that what you're asking? A contract is when you enter a futures market like the MNQ, you're not trading shares of like a stock. You're trading a contract to the futures market. It's a derivative. It's worth 20,000, or actually, in what I'm here, it's worth $5,000 worth of stock in the NASDAQ is the contract value. The micros or the minis themselves are 20,000, and the ES it's 50,000. So you're controlling any between $5,000 to $50,000 worth of stock within that of any stock or all stock within that particular indice. That's what the contract is. It's a futures contract traded on the Chicago Mercantile Exchange. $20 a point in the micro in the mini is $20,000 contract value, right, of total stock that you're basically controlling at the time of entry. And then if you're looking at 50 cents a tick like you have um in the micros, you're controlling $5,000. Hey Ram, how's it going? I hope you're having a good morning. For some of us, the weekend is coming to more to an end than others. If it's Sunday evening for or night for those individuals around the world, for me, my Sunday is just starting. So I figured I'd start my Sunday by doing some practice. Everybody in the house is still asleep, and I can just come in and just practice without distraction. Not really doing anything here. I don't really see a lot to do at the moment. I just kind of want to wait and see what price action does around this area. I'm already up 1900 on the day, so there's no sense in adding extra risk to anything at this point. Where will we be looking at price to go back up to? Possibly back up to the VWAP around 812. Around 812. Do we have anything around 812? We have the 826. What is this right here? 803. What do we have in high volume over here? Anything? Oh, look at you. Well, look at you. I could totally go short here. Huh, let's try it. Let's see what happens. Worst case scenario, I take an expense, right? We're going to risk a $200 on this position. I think it's going to pop up more because of this bar over here, because of a lot of strength in this bar, right? But looking for rejection in this area anyhow. For a continuation play to the downside. Let's see what happens. Watching this pretty closely, see how we're coming down, but then there we go. Now we break the low. That's what I wanted to see, was breaking the low. Could move stop into a break even there, but happened kind of quick. Wasn't as fast on the button. Some lower low moving right here into the area. This would be another reason for a re-entry. So if you're just trading one contract here and you have inventory, you could have another entry right here in this area as it's coming up and testing. If you are inventory as well, if you have inventory coming back down through here, another entry. So there's 3 different entry points on this one particular bar to the downside. This is in confluence right now with the higher time frame charts. We didn't quite make it up into VPOC, so we could move higher here at 814. I don't like the rejection down here either. Let's see if we can get back down and test into here, and I'll be moving my stop to a break even. I shouldn't have taken an expense on this. When it came down and rejected, I should have been out with a break-even trade. But let's see if we break the low. There's the low. Beautiful. Now we're going to turn around and start to scale out of this position. Up 300. Oops. I don't know what it's doing there. There we go. Up 134, up 278, locking in 134. We're going to lock in 254 after being up 400. We're going to go ahead and lock in a little bit more here at 350. As we're looking for some a possible little push back up here in this test. And if it doesn't, we're going to come back down here and we're going to come back and test into these lows right here, which we're already doing, anticipating these lows to break with as much of momentum coming into the market. If they break, they're coming back down here into this area. I think we had a target down in here before. We can go ahead and put that target back in if we want to, but I'm not going to. I'm going to try to get this out with momentum coming into the market, letting the momentum take me out of the market instead of a target. Target was someplace right down in here. I don't think we've touched it yet. Call it 71.5. Let's see if the 71.5 would have been more advantageous or scaling out the position would be. Up 700, locking in 600. I'm okay with that. I don't think we would have hit the target anyhow. I think the target was over farther. But there we go. Up 25.87 on the day now. And now we're going to go ahead and wait for another position to go possibly long in the market, because now we've tested the range down here. Look at the high volume in here. If we hold this area in here, we're going to probably see a continuation play to the upside. Now let's see if we can get a pullback into this area right here. Okay, there we go. I'm going to go ahead and put my stop loss right below here. I'm going to go ahead and risk like $216 on the position. We're up about 100. I don't like how we snapped back down there. About 90. We're going to go ahead and move this up into a break-even position. No, we're not. No, we're not. Not yet. Not yet. The volume in here increasing. I'm anticipating this to be a little bit more of a support. I'm going to take a little bit more of a risk in the position because I'm looking at this area here. If we come back down here into here, pushing back up again, have that support momentum coming into the market. I may be completely wrong though. And it looks like I am. We're going to take a hit on this one, and that's okay. Nope, no hit. But let's watch this. Let's watch the open of this bar. Okay. See how we did not make it up to the open? Watch delta. Yeah, I don't like this at all. I'm not interested in being in this anymore. There's the open. We get above the open. Look at delta. It does not go back green again. We don't have market orders coming in buying this up right now. So I'm going to go ahead and take out with I'm just going to scale this up, get as much out of it as I possibly can. It's not behaving in a way that I would want it to. And see, we're still scaling up 176, right? You know, when market isn't behaving in a way that we would expect it to, just go ahead and get out and let it go in its direction. Let it do its thing. Let it do whatever it's going to do, right? But in that case, it took out quite a bit more revenue. I mean, I was willing to get it $20 and I got what, 176. I'm up 27.63 on the day. So I don't really care right now. I'm just trading the charts, trading what I see. And it's 10:12. Nope, we should probably delete that. That would be helpful. Let's go ahead and make sure we're completely canceled and flat. Good habit to get into. RAM. I'm pretty confident right now that I can trade live in front of people now. I told you I would get to the point where I'd be able to do it. And usually when I put my mind to something like this, it doesn't take me very long to get to the point where I'm actually able to do it. We're going to test it tomorrow. I'm going to go live again. We're going to test it and see. $10 a.m. New York time. Push the envelope a little bit here on a short up here. 234. What would I be looking at? Potential profits. 704. Oh yeah, definitely. Threat me with a good time. Going up there, I tell you. We're in a very tight rotational market right now. We're just scalping around the edges of this little balanced condition at the moment. That's all we're doing. The price action didn't quite come up to where I was wanting it to go, and that's just fine. We'll go ahead and cancel these orders so that way they're not resting there. This price action is already making higher lows in here, right? So see what we're doing. We're making lower highs and lower lows. Okay. So we're kind of in what could be perceived as a potential downtrend in a short time frame chart, right? Lower highs, lower lows. And I'm trading off of the same chart that I have here. The only difference is I can move my chart around that I'm trading off of, and I can leave this here for everybody to see on TikTok, and I don't have to move charts around all the time. That's the key. Because trying to move charts around all the time is not an easy thing to do by any stretch of the imagination. So I fixed that little problem for myself too. Now see how this bar is coming in and retesting in here, right? Watch this volume in here. Look at delta. I'd anticipate right now that this high volume to be tested and possibly broken. Came right into our area there. Could be short in there. A little tight for me. I don't really want to play in this range. A very smart trader once told me yesterday, don't fiddle in the middle. So I am not fiddling in the middle. DJ Vito, if you're out there listening, this is probably why he says don't fiddle in the middle. Everything right now is telling me, I've got, I have an hourly and a 240 minute that's telling me that market doesn't know what direction it wants to go in right now. I have a daily perspective that's telling me that, hey, you know what? We can still look to the downside, but we're kind of overextended a little bit, which means careful. But the daily is still saying downside, right? Even though we're overextended, still a downside. The 240 and the 1 hour is still telling us as well that the previous bars are strong to the downside. Right now, we don't know what we want to do. And if the market's telling me that it doesn't know what it wants to do right now, then I'm not going to try to guess what it's going to do. And I'm going to sit back for a few minutes and I'm going to wait and see what this market decides to do. But the long looks good right now. And see what I mean? Even though the long looked good there and it did go up, what would you be doing right now? Probably creating a scratch trade for yourself right there, because price action didn't move with any authority in the expected direction. Why am I flat right now? Because I'm not expecting price action to move with any level of authority and direction because of the lack of confluence between the time frames. I feel like I have my crystal ball out right now. I haven't felt like I had my crystal ball out since I've been streaming live, to be honest with you, even in practice. But right now, I feel like I'm pretty locked in at the moment. I'm sure my voice probably sounds a little monotone and those type of things, but this is me locked in, and one of the signals that I know that I'm locked in. So I speak with a bit more authority, a bit more not sure, because it's not that I have a lack of surety when I'm not locked in. It's more of a flow, more of a knowing. It's not like I know where the market's going to go. It's that I'm locked into the analysis, and I'm feeling the market itself. I'm feeling the flow of the market, of the participants, and how things are trading. Like right now, chances are we're going to break down below these lows. Not saying it's going to happen, I'm saying probability speaking. See how we tested back up there again? Look at the delta. Delta rose nicely. We get back through the open of this bar, right? We're trying to go down. We can't go down. Where's the market going to do if it can't go down? Go up. What is the market doing right now? It's going up. That's the fill of the market. But see how we're going up and we can't go up? What are we going to do? We're going to come back down and we're going to test where the sellers got aggressive again, or the buyers got aggressive. Where the buyers get aggressive, they got aggressive here and they got aggressive right down here. And then that created aggressiveness and a push in market orders around the highs of the bar to push price into new highs in this intraday bar. That is how you read participants in the market. What do we have here? We had sellers step in. Okay. Buyers are willing to buy above the high. And that's how you know that you have buyers in the market. Not because price is going up, because you actually see the buyers and you can anticipate them stepping into the market. This is probably going to go. There she goes. How far? Don't know, but we broke the highs. We have a lot of resistance above us. That would just me scalping out a little bit of this particular move right here for the momentum down here. The fact that we came back down in here, no sellers were stepping into the market at all, very low volume, looking for another push to the upside. We broke the high over here, and if we break the high over here, we're probably going to test that high, not usually through it, but test the high and then push back up through here. The fact that we got through that high tells me that price action could turn around and reverse from that place. So now where's price action going to go? Probably test back down here to where buyers were once strong. And see how we're testing into the high volume here, right? Sellers were strong here. It's another area where we tested immediately, started trading higher, came above this bar where we know buyers were strong, right? And we just rejected from that place where buyers were strong. So price action is probably going to start rotating back into lower areas where buyers were aggressive in the market. And this is what market makers are doing, right? Trying to find a market, a place where participants are going to jump into the market where they don't have to. Because when participants jump in the markets, that's when they're able to add size into their positions and allow market to go in their direction, and they recoup what they lost from the rotations. People think it's stop runs. It's not stop runs, my friends. Sometimes, yeah, there's some manipulation like that going on to the market. It's not a lot in the US because there's regulations and rules that you can use to stop that. Will they actually enforce them if it's a large bank? They actually will. Yes. You'll see banks being um you'll see banks being fined. But here's the thing about the banks though. They're going to calculate what the revenue is that they can make. And even if they're going to go do something against the law and they know it's just going to be a fine, and if they can make more than what the fine is going to be, they're going to do it. They do. That's the game we're playing. So if they can make more from stop runs than what they're going to get hit in fines from the regulators, they're going to do it. Guys, I'm in compliance right now in financial services. So, you know, it's the games we play, my friends. It's the games we play. And people will say, play stupid games, win stupid prizes. Well, you got fined all this amount of money. Well, yeah, but how much money did they actually make that triggered the fine? And if they made more than what the fine was, then breaking the law was profitable and you're going to do it again. Now, I'm not saying stop runs are profitable for firms in that regard, but manipulation and those type of things, other forms of manipulation, oh yeah, and they will absolutely do it with anticipation of what the fine is going to be, making sure they're still going to maintain profitability. And Ram, good find there. Wait, wait, wait. Is that Deadpool? Is that Deadpool in your thumbnail? Ram, is that what that is? No, it's not. It looked like it though. That would have been awesome. I love Deadpool. Deadpool's so funny. My kind of humor. And we could buy this here. The only problem is we've been testing it so much. Yeah, no, I had to look. That was awesome. Though, thank you for playing. I appreciate it. Um, the we could buy this here, but we're already down below the open of the higher time frames. I'm not too keen here at this point. We've tested these lows so many times that I'm anticipating the lows to break. There's just no sense in pushing it and taking on the risk, right? I'm already up 28.33. There comes a time where we need to preserve capital and not try to do anything crazy. Thursday when I traded this, I was long in here. Oh, I'm so locked in right now. I'm absolutely seeing everything that I was seeing when I was live. When I took this position here, I did get stopped out with a break even because I did enter a little bit too late on the position and I got stopped out here. Yeah, it's coming back to me now. Ram, this is a good thing. I have to admit I'm kind of excited right now. Um what's a day that you haven't seen me replay Ram if there's any of them? What's a good day that you could think of me to trade this to test to see if I'm locked in or not? Because this day has pretty much already ran its course. I'm at 28.33. I don't remember exactly what price action it did. I think it did break down and then we came back up. I don't want to have an inclination of what price could do. So I'm going to go ahead and stop it here, as this is the first time I realized that what I was doing before comparatively to where I'm at right now. So I want a good day that we haven't done. Yeah, exactly, Jerry. 100%. And if I can do this here streaming, hopefully I can do it live as well. I'm feeling really good and I'm feeling the physical sensation of being locked in. So I know what it feels like. I also notice that there's a change in my voice as well from the way I normally speak. I feel like I'm speaking a lot slower. I think I'm speaking a lot clearer, almost with a sound more of authority than um not indecision as before, just maybe even more balanced. So, 1st of July, February 29, I would love to, Jerry. I can't go back that far. I don't have enough data. I need to download data for that. And every time I go to download data, I end up streaming. And streaming and downloading data doesn't work well. I can't go back past March 31st, but I'll get data in. Let me write down February 29. February 29. Thanks, Jerry. Appreciate you. Good catch. Yeah. That took me a second. Thank you so much for playing, sir. Appreciate you. Oh, don't tell me that. It means we're probably rotational if you're testing the IB strategy on that particular day. Damn it. Ram, you just messed it all up. Yeah, thanks, Jerry. Good one on you, my friend. You almost caught me. You almost had me. I've been typing in February 29th and hitting set and it's going to March 1st. I'm like, what, or February 28th or, whatever it's going to do. It would be the 29th, actually. I would be playing and there would be no data and be like, what's going on? Oh, yeah, you would totally broke my brain. Well played, sir. Well played. I will absolutely give you that one. That one was good. I won't even come back for revenge on it. Leave that one alone. You win. You win this round, my friend. It's good to see you, by the way, Jerry. Yep, you did. You absolutely did. I didn't take the action, but mentally, intellectually, 100%, you got me. Did not catch that at first. And if I would have had the data, I would have absolutely done it. Hey, at least I'm honest, right? And I own it. Oh, this is going to irritate the bejesus out of me, I swear to God. Maybe I just need another bar. Why? There you go. Thank you. Thank you, thank you, thank you, thank you. All right. All right, all right, all right. Let's get into this. 9:30, July 1st. What are we doing here? Proves I'm locked in. Is that what it is, Ram? Proves that muscles are required and intelligence not essential. I don't even have any muscles anymore. It's so sad. It means I'm geriatric. That's what that means. WWW stream, thank you. I appreciate that. As long as, we're not talking about World Wrestling Federation or what the Wildlife Organization. I don't know. Is there an organization out there, WWW? I'm thinking WWE now. I don't know. Whatever. It's Sunday. It is Sunday. Okay. So we broke out of the range here. We broke into the range here. We broke out of the range here. We broke out of the range here. Let's see what range we're in. Let's see if we're rotational in this area right here. This is one thing about going back through and doing these days, okay? When you have profiles on all of these time frames, okay, and you have a breakout here, which is your market shift bar, What you want to do is just keep your profile up. Take it for so it's not extended and just leave it up. That way it's always there. So you know when price action comes in here, you can easily come in and just hit the extended, right? And you can tell I'm not rotational right now. And if you're not rotational, that's not the one you want to use. So you would just go back, take off the extended, right? Move it back to the place where it needs to be, the bar before the market shift bar, right? And then what you want to do is you want to come in here and you want to say, okay, here's the low of this previous area of value. Where's the close below? Right here. This is where we want to turn around and put in another profile, is right here. And now what are we? Now we're rotational. So now we're going to go ahead and extend this. And we want to use this area here as our area of balance for this particular market. Does that make sense to everybody? And then we break out of that range here on this bar. That means we need to come back here, take this off of extended, right? We're going to bring this back over here. We're going to highlight it because it likes to be highlighted. And in the highlight, we've got to bring all this back. It's problematic, but that's okay. I don't think it's the system. I think it's me. I'm going to bring it right back to the bar right before the breakout. And we're going to put a new. This is a great day, by the way, Ram. Thank you. This is going to be an interesting day. So we have a breakout. We have price action that looks like it wants to start to trend to the upside. Oh, this is going to be fun. Okay. Yeah. I want to trade this day. I have never traded this day before, I don't think. Maybe I have. I don't know. I do know that I don't remember. And I do know that I like where we're at right now. Interesting. This is a very, very interesting day. Okay. What do I need here? I need you on here. Thank you. And now what I need is this. Technically, we're in a trending market condition, but in a trending market condition, I don't really want to be long. If we test down here, where are we testing? We're testing this whole range right here. My God, I kind of like that. I like that a lot, actually. I mean, look at this. Look at this. It might take a little time to develop out of here. It might take a little bit of time to develop through here, but that area right there, boom. And we're in unfair highs of the daily perspective. I need to unmerge this because I want to see where we're at. I'm going to bring the chart over so you guys can see it. Don't worry. This. Oh my God. Huh. Okay. Okay, that changes everything right there. That changes absolutely everything. We gapped down and we filled the gap. We filled the gap. I have a feeling on this particular day we're going to go down into the 679 range. When I say 679, I'm talking about 29,679. I don't think we're going to get there in this one particular day, but this is an area right here where I want to look for a potential short position. Wow. Okay. All right. That changes the perspective on this a lot. Am I going to have a down bias on the day? I think I'm going to. I think I'm going to have to create a down bias on this day. And the down bias, damn it, I don't like to create a bias, but I think I'm going to have to on this day. Because we just filled a gap and we came off of VPOC of that on a profile. Look at this profile. All right. Look at this profile. Look at the B formation of the profile. So many sellers in there. And look at the P here, and we cannot get above VPOC. If we get above this, I'm looking for longs. If we hold below this, I'm looking for shorts. It's that simple. It is that simple. It is that simple. Okay. Now I'm clear. The 1 hour is telling us short. The 240 is telling us short too, but the only problem with the 240 is, there's not really a problem with the 240. I'm anticipating price action to come down into 30,082. Where are we currently trading out? 2367. Yeah. Okay. Beautiful. Well, let's hit play and see what happens. I'm done talking. I want to trade this. Do I have my area? Did it plot? Oh yeah, it plotted. But look, there's the area all the way up here. Look at that area up here. That's this area here. Let me delete it real quick and make sure. Yep. So that's already up there. That happened in the overnights. Oh my God, this day. Oh, this day could be absolutely a lot of fun, or it's one of those days where I could get into some expenses. But this area here is very, very intriguing to me. Okay, let's just get into it and see how it plays out. And let's see if I can lock in and trade this accordingly. Where's VPOC? Or where's VWAP at in here? We're already in the second. Okay, what has this market been doing in the term or the short term? Just trending down. Of course it is. We're just trending down. The bands are coming down significantly. I'm not too worried about being in an overbought or oversold condition at the moment. I don't want to short off of the open. This is the area right below us. I want to wait for this to establish. I'm going to give this some time before I try to go long in here. And I'm just going to have to find short-term areas to go short off of because I don't have a lot of anything around me right now. 336. .336 is in a bad area. What's going on around 336? Anything? Nothing recent, but some things going on above here. So I'm going to use a short-term area for entry. I normally don't do this, but I'm doing this strictly because of filling the gap and anticipating a continuation to the downside. And look where that area is right now too. It's right there at VWAP. Look at the confluence on that. Jeez. I keep doing stuff like this. I'm going to have to get somebody to nickname me the Bob Ross of charting. This is ridiculous. But let's see if I can trade it. This type of analysis is good, but only good if you can turn around and utilize it to execute on. Hey, Ram, do me a favor, please. In terms of what I just did there for, you already traded this and you used a day for initial balance, right? Just think of a grade that you would grade the pre-market analysis that I just did before this day plays out. Don't tell me what that grade is. Wait until I get done trading this. I just want to see. I want to see from your perspective how you would rate the pre-market analysis that I just did based upon what you know this day does and why you tested this day. And the grade can be out of 1 to 10. It can be, you know, A, B, C, D, F, whatever. 3082. Where's 3082 at? Is it in this range? It sure in the hell is. Okay. All right. Let her come down. I don't really want to trade the open right now. Even though I'm in an area in here, I don't really want to. Continuation to the downside there without rejection. 4 out of 5. Okay. Thank you. I appreciate that. I'm going to be interested to see after this is done what the what I missed to be 5 out of 5. But see, 4 out of 5, not knowing what the day is going to do, it's not too bad. Could be worse. Where's 336 at? 336. Oh, 336 is right up here too. Okay. I need to mark 336 as well. But 336 is going to be, yeah, I'm marking 336 as well. 336, 336, 336. And we're just going to go ahead and do something like this real quick. I'm watching price on the back of my eye here. Don't worry. Now I want to see if there's anything around 336. Right up here. Right up here. I want this index. It's a little above 336, but we're looking at 335 up to 346. 5 out of 5 if you gave me 2 or 3 anticipated moves. Okay. Well, let's see. Let me see if I can. We're going to find out. Okay. So we're getting extended down here, right, in the IB. We have a nice wide IB on the day, all right? So wide price action. The first thing we want to do when we have wide price action like this is we want to give things a little bit of time to develop, all right? And so we're going to give this market a little bit of time to develop here. 240 hourly, all telling us short, but we're looking for 3,089 down here. I want to make sure I mark 3,089, and I'm not going to mark it with an area. I'm just going to mark it with a point because we're already in the area. I don't need to worry about it. I want to see what happens if price action comes down here. High volume. See that high volume in here? You get the little bit of high volume in here. That could be rejection in here. Okay. Price action is just trading off here. Lower lows, lower highs. Rejection down below us. I'm going to do something a little bit crazy here. I'm actually going to put a buy order in here. I just want to look and see what the risk would be. $380. Let's raise it to 450. In fact, let's put it at 500. I'm going to try to catch a falling knife here. In fact, I'm going to go above that area just a little bit just to make sure that I'm filled. Raising the stakes just a hair. And mind you, the long here, I am absolutely 100% catching a falling knife. Okay. Got to be very careful with this position. Extremely careful. 136. Okay. Already locking in 52. There's the higher high. Oh, goodness gracious. Sometimes it's fun to be me. There we go. Locked in 250 on the day so far. Let's play. Probably overmanage that position a little bit. I'm probably going to break this whole little area right here. But I'm trying to catch a falling knife. I'm going to wait for another setup to establish itself here and wait for the market. They don't have to be played out, just anticipated. Well, was that anticipation enough for you, Ram? Did that help? I mean, as it stands right now, right? Oh man, man. I knew I should have. I should trust. I should really learn how to trust. I mean, what I called the low by what? What is it? 87, 89. I called the low by 2 points. Ah. Of course, we don't know if it's the low of the day by any stretch of the imagination, right? We can snap right back. I didn't like how we weren't coming in with momentum here, but I should have trusted my area, and I should be back into a long right here is where I should be, around the 16 and a half. Okay. But that happened so quickly that I just couldn't get the entry in. All right. But there's a re-entry right here at this price level right here. Okay. And now be careful. This can absolutely snap back on us. And the only reason why I'm looking at it could snap back on us is because of the hourly and the 240. And so I'm being very careful because the hourly and the 240 is telling us we're probably coming down. Okay. And I'm fading. I'm fading those time frames right now. And now I'm going to wait for a lower low to happen. Maybe the higher volume in here. I really wish I could play music in here. There we go. There we go. There we go. No, I think I got caught in the cookie jar on this one. My hand is going to be caught in the cookie jar, my friend. Well, that's quite all right. I'm just going to bleed some risk out of the position. I'm going to bleed more risk out of the position because she is not doing anything I want her to do. Break even trade. I didn't like how she snapped back here and started to increase the volume in this area. I just didn't like that at all. I was anticipating the low to possibly break, and we haven't broke a higher high yet. So now I'm going to stop trying to trade around this area at the moment. I'm just going to wait. What do you think about the area in here, Ram? You know what happens. What do you think about the area? I'm being too conservative with my exits, aren't I? Now we're just in a range. And what do you do if you're in a range? Trade the range until it breaks. Where did it come to? Higher area of volume right there. Look at that. It came right to the higher area of volume. Did it come back to my initial area of volume, but it came right back into the higher range of value, which makes perfect sense. If buyers are strong, they're going to buy the higher area of value of volume instead of the lower. You did similar PMA to identify this area? Yeah. Yeah, no, you did great. Well done. Did you hold? Did you enter down in here and hold? Did you get in like 2 points from the low like I did here? Oh man. Oh, call the 2 points from the low. Yeah. Yeah. 2 points from the low and I'm only up 291 on the day. That's good job, Tony. Oh man, I need to learn to trust that area a little bit better. I need to learn to trust that area a little bit better. And that's okay. There's nothing wrong with that. You entered there because you're testing out the strategy. Well, that's a good strategy to continue testing right there. You can get in at that tight of an area, with that tight of a risk. That's definitely something to keep looking into. But we're not breaking out of this range though, right? At least not right now. We absolutely could, but we're not breaking out of it. And so what do? We wait and see if we break out, and if we do, right, anticipate price action to continue moving higher. We're on fair lows, right? We're going to probably move higher, right? This is a whole low volume range here that needs to develop anyhow, and it's taking time right now in developing that. So we could trade the range itself. We could short up here, and we can go long down here and just absolutely trade this range, right? I'm just not really interested in doing that right now because it's a little bit tight, and I've got strong reasons to expect buyers into this area. So what I really want to do is this. I would really like to have us come up into VWAP and see how it handles VWAP here. And I would really like to see a breakdown below and then a possible continuation to the downside. And the only reason why I'm looking at the downside of continuation as a possibility is because of long time frame charts. I'm out of confluence with the 1 hour and I'm out of confluence with the 240. Both of them are telling me down, and not just regular down, like strong down. And I'm having a really hard time fading those right now. Use New York session volume profile. So when it break and tested unfair lows of New York session, I normally enter long with point of control as profit target. Yeah, absolutely. Absolutely. In this case here, right? Point of control, you're looking at least on the 30-minute chart, yours might be a little bit different, but 524. But you wait 15 minutes? Yeah, I'm just not a patient person. Patience and we shook hands a long time ago and said goodbye. We're not friends. As you can tell, entering right here, that entry I just had right down here, if I was patient, I would have held. You're not doing what I want to do, so I'm out. And look, came right back down to the area again, right? So if you're scalping this area, there's another long setup right there. So we had 1, 2, 3, 4 setups to the long side and nothing to the short side at all right now. And I took 2 of those setups out of the 4. But nothing on the long side right now is actually showing us any form of strength, right? Every time we come up into the higher highs here, we keep rejecting. If we continue to reject highs, what is it eventually going to do? It's going to come down, it's going to test the lows. At what point in time is it going to test lows? We don't know, but it's going to break out of the highs right now anyhow. When we break out of these highs, we're going to just pop right up into here with some momentum. Yeah. Yeah. Yeah, no, I just didn't hold. That was my whole issue. I didn't hold, and the only reason why I didn't hold was because of the 240 and the hourly time frames. And I'm gonna wish I held. But watch this though. Watch what I'm gonna do. I'm gonna do something here. Just because I can. You'll see. Give me a pullback. And I should have put it right up here. Is where I should have put it instead of down where I did. I should have put it right there, which would have filled me again by 2 points off. Okay. Duly noted. Duly noted on the long. All right, so we're just going to hunt for another position now and look for a continuation play to the upside. You see what I'm doing here, right, Ram? There we go. See? All I did there was just entered the two sides of the position. There it came right back into my earlier entry that I had, right? Right down here. That was that earlier entry before I moved it up here. We came like, what, 2 ticks off of that. Now, where am I wrong in this position? Can I manage a risk down to here? 1376, I don't really like it. 648, that's better. 360, I like that. Let's see if I can break the highs. There we go. Now we're going to move it to break even. I don't like we keep filling off these highs up here. And I need to trust this position though, because this is coming off of the longer time frames. Let me give this, I was going to try to give it a little bit more room. So where would be the next plausible area for an entry? They'll be a little bit tighter. Right about here, if it gives it to me. And it does not. I should have given it more room. I just didn't get it moved in time. And there's the break. Now we're probably going to come down here into this area and put this here. Look to see if it gives us an entry. Now I'm just scalping, right? I missed the position move. Well, I got into the position move. I overmanaged the position move. And now I'm just looking for scalps for entries to the upside. And that wouldn't have filled me anyhow. Let's go ahead and just leave it in here though, because it might come back off of here, come back and test the low, break it a little bit, maybe even move into this area in here and then pop. But it's probably going to go without me. And in cash account, I wouldn't be scalping in here because I wouldn't be all in and all out, right? What you do is in these types of positions here, you scale into the position. And so what I might end up actually doing is just putting in one contract in here, and then start adding into the position. Adding in here once, adding back in here again, right? Utilizing this range right here to add into the positions. That way I don't overmanage the position itself. Because that's where it's telling you right there. And it told you that here, not back here. It told you that here. Now you can't see that. Here, let me put the range back in for you. Here's your range. Right here. And it tells you that right here. That's your range of entry into this little area. And this is where you start collecting inventory throughout the whole position. Enter down here, most definitely. Just a small position. And then instead of overmanaging the position, add a scale in, scale out, scale in, scale out, scale in, scale out. Never losing your full position. And then I missed that by what? A point, couple ticks. So yeah, there we go. I'm only going to be up very little on this day, even though I nailed the area and nailed the entry, right? The initial entry. Just overmanaged the position is all. And that happens sometimes, you know. I mean, especially when the other higher time frames are telling you that, you know, we have issues. Now we're up here at IB. And that hourly chart right now, do I want to try to fade this? I think I do. I think we come down and test the lows before we go up. I could be completely wrong. What's the risk on this? $140, definitely worth the risk. I'm going to risk $140 on the possibility of it rotating back down. Good golf. I like that. Like that, like that, like that. The area I'm utilizing here is IB. So I'm literally using IB high for possible rotation back down to the downside. That's all I'm doing here. And because of the strength of this market, it could absolutely just rise right back above my stop, and that's it, right, for the position. But we're having problems getting through the open. This is where I just locked out. I just broke. I just broke that locked in. I'm not locked in at the moment. And what just happened was price action didn't come back down through the open. Okay. And so I'm like, man, you know what? I don't like that. Okay. But then I'm like, but what happens if it goes? And I missed all of this by overmanaging the position. And I just questioned myself, what happens if I overmanage this position? And by doing that, Now I just undermanaged the position. I broke the trust of myself reading the markets. That's what takes me out of being locked in. It has nothing to do with in here, other than the fact that when I'm in here and I break that trust in here, it's like the need to perform compounds it. And now now as a trader, I'm in trouble because now I just compounded the emotional feeling because I'm in here and the need to be able to perform and the need to be right. This didn't trigger my need to perform and be right because I managed the position. I made a decision. Okay, beautiful. Here, I know what decision I need to make, and I'm not managing it because I'm afraid that if it just goes and I overmanage the position, now I turned around and made a mistake. And now I'm locked out of the charts. Now I'm I'm no longer locked in. I'm locked out of being locked in, if that makes any sense whatsoever. So what am I going to do? I'm going to turn around and get myself out of the position. That helps alleviate the emotions. And now I'm just going to let this do what it's going to do. And I'm going to wait and hunt for another position. Did you see that, Ram? Did you see what just happened there in that context? That was a good lesson for me right there. That helps show me what locks me in and what takes me out of being locked in. And in that context, I'm able to use that information. But I would have never had received that information. See, I should have been short there. I should have been short there because we were not going back up again. Even after we tested it, we couldn't move higher. If the price action can't move higher, what is it going to do? It's going to move lower, right? But then we tested the low, and now it's going to break. So the buyers are coming in, anticipate price action momentum to the upside right now. And because of that, I want to see what happens when we break down through here a little bit and move my stop to a break even. There we go, right there. That's what I was looking for. It's that little pop down. That allows me to move into a break even without taking expense. And now I'm anticipating price action to come back up and break the high. That was a good trade. That was probably one of my best trades this morning. Damn the higher time frames. They're helpful sometimes, but every once in a while on a day like this, they get in the way. So today was a good example of, over managing the position a little bit. I mean, that was long from this line right here. I was in the market this morning, 2 points above the low, and I'm only up $396 in the day. Oh, good times, good times, good times. Overmanage the position. It happens. It absolutely happens. But with a risk that high, man, that's all right. We have our other area above us right up here. We want to see what happens when we get up in there, because we're going to get there. That's 42.75, 35 to 46, yeah. And then I want to put this right here. Beautiful. Let's see what happens when we get up here into that area. This area up here, right above VPOC. Right up here. And that's what happened this morning, right? Going through here, I'm fading the 30-minute, but I'm going in direction of the hourly. Okay. Now we have the 4 hour, which is showing rejection below us. But at the time, everything was telling us down through here. And I just didn't trust the position and hold it to the downside. And then here, everything is telling us, possibility of up as I'm coming in and I'm trying to short this. And that one didn't work out. So if I would have taken this for the long, and possibly hold it through here, I would have never taken this. But if I would have taken this as a short and held it, I would have had an expense. So it's kind of, I got in too late. I chased it a little bit, but let's see if we can't get this area to hold and move into the 335 area. Should have been in right in this area right here. Right around the low of that bar is where I should have been in at. I got in way too high. And what are we looking for it to test? We're looking for this to still test, and we're waiting to see if it's going to hold this area right in here. That's why my stop is below this area. This is the area that I'm looking at price action holding, is right there. Now we can reduce the risk some because we broke the highs in here. Delta's looking strong here, but we're not raising the highs. So I'm going to go ahead once again, be aggressive on my stop. And why was I aggressive on my stop there? Because right here, we're rejected just below VWAP. You could be in a short up here if you wanted to, right? So we have the market right now making higher highs, higher lows in an area of rejection. Daily chart, the 4 hour chart are both coming down. You have a possible rejection bar on both of them, but you're trading below the close of the 4 hour chart. Okay. And so that could be a reason to go short in here. But then you've got the structure of daily and 30-minute beneath you looking for longs coming into the market. So where this is one of those days where we have both sides playing out, and the longer time frame right now, daily perspective, is holding and stronger than any of the other time frames. So this is where now, if you find a place to buy, you hold. Because now we have confluence, much more confluence in the higher time frames. And now you'd be anticipating momentum to start coming into the market where we haven't had much momentum coming into the market before now. We've just been kind of in a slow chop grind. Now we should anticipate momentum and momentum to come in here and possibly break the highs. And if you're anticipating momentum to break the highs, buyers should be in here aggressive enough that they're not going to come back down and test the lows. So you can put a stop in here into the lows. And that way, if the momentum doesn't come in, we're probably going to test the lows. If the momentum comes in, we're going to push away from this quickly enough that we're not even going to get the chance to come back and test the lows. Delta here is extremely important on this bar. You want to see the green delta come in quickly and rapidly on here. If not, this could be failure up here, and we can see a rotation to the downside. On a day like this, I'm not making much money. I'm only up $440. But what I am doing though is I am preserving capital on this particular day by still maintaining some revenue. This is one of those days where it's difficult for me to trade. It's difficult for me because we're out of confluence in multiple time frame charts. I'm picking up where I'm anticipating momentum to come into the market. I'm picking up, the possible rotations to the downside, and I'm playing on both sides of the market right now. What we're not getting is a lot of strong follow through in any one given direction because we're out of confluence in the two time frames. All right. What I should have done is just gone long and stayed long. I overmanaged that initial position. And now if I overmanage that position, the only way for me to get back in is to find areas where it makes sense to re-enter the market. And now that we have confluence in the other higher time frames, now we can look for reasons to be going into the market again. But now, because we lost our initial position from down here, now we need to scalp into the positions. Why do we need to scalp? Because we're out of position. And anytime you're out of position, you got to scalp. If you're in position, position trade, swing trade, day trade, do whatever it is that you want to. Manage the position off of your longer time frame charts. I couldn't manage the position from my longer time frame charts down here because my longer time frame charts down here were telling me short. The only way I could have managed it was I could have used the daily chart. And I should have used the daily chart. But that's the only way. In hindsight, I should have used the daily chart. But the daily chart's the only way that I could have actually managed this position today in that long. And now I've just got to find scalping positions. And scalping a market that's out of confluence is difficult to do because you're just doing a forced trend without a lot of momentum. We had the momentum coming out of this area 3 different times. And since then, just a slow grind to the upside. Not a lot of momentum, not a lot of actual directional movement, but your higher time frames are out of confluence. And so you shouldn't be expecting directional movement. Excuse me, sorry about that. It already moved. I'm looking for a quick short scalp to the downside off of VWAP here. That's all I'm doing. And I'm looking for this area down here to be tested to this high volume. Not really even looking for the low to be broken. We have a high delta in here to the upside. Now we look for a momentum push through VPOC. This will probably be the expense trade. I said VPOC, I mean VWAP. I always call VWAP VPOC for whatever reasons. VWAP. That's a yellow line. My purple lines are VPOC. So if anybody sees I'm saying, something about VWAP or VPOC and you see a yellow line, that means I'm talking about VWAP. I just switched them around. You have the seller resistance here, but you have buyer support right above the opening position, the entry point. See how we have a fight between buyers and sellers here? The buyers are winning. You can tell the buyers are winning. Look at the market orders being placed in the market right now. But we're unable to make a higher high. But see how we came down, tried to make the low, and then delta moving up. This is going to break the highs. There you go. There's the expense trade for the day. Now, let's see what happens when we get up here into this area. It's 10:12. We still have plenty of time. I'm looking for price action to come back up here. Yeah, good. Because I'm looking at 58.5 to be tested. If we come through this area right here and we get up here into this area, okay, where I just put my target in. If we get up into that area, I'm looking at looking at the market possibly trading up into the 54.25. And so possibly rotating right through this area. So I put my stop right above the 54.25 area in case that rotation comes in. And there was a short here that could have been taken here at 11.25, but I really wanted to get up here into this area. And I still think that price action can move up there before we start moving down, even though we had this really nice down bar here. We're in an area here too. We do a continuation play for a downside at 94.75. I broke that trust ram right back here with myself, right back here in this area, and I've been struggling since then. I'm have a little bit of more of a lack of confidence in my ability to read the chart and read what's going on, um, and be able to execute on that at this point in time. And I haven't gotten it back yet. And this is one of the things I'm going to have to work on in the live trading. I know what it's like to get into the flow, right? Into the zone, if you will. But how do I get myself back into it after I got out of it? Because there was an entry short here that I could have absolutely taken and not waited for this area here. Once it moved, there was that entry here at 95.75 that it should have been in on the pullback of this move that would have absolutely filled me as well. Both of those positions. And then what are you looking at? Price action to come back down into initial balance high. And so that could be your first target into a scalp, right? Right there alone. And then if we hold this high volume in this area and we close below this area, we could cycle all the way back down into our area again of our unfair lows. here on this pullback, or are we looking at for an entry right about here where my line is around the 54.5? If you're still scalping and you want to look for a short, you're looking at, or sorry, 94, around 94 here on a pullback for another entry on the short side, 94.5. That would be the fill on the short. If you're re-entering in this, looking for a continuation to the down play, and you'd have to have your stop up here above VWAP in order to do this. Got the momentum coming into the upside. This would be another entry for a potential short position right here at 312. But at this point in time, this last bar is such a strong bar to the upside, and everything is telling us long on the higher time frames right now. We're above the open of the, or above the close on the 4-hour chart, and we are currently above the open on the 1-hour chart. See how we have that fight here at the open of this bar? Watch delta. Watch delta and watch the open. We never got back above the open with green delta. Now look for a continuation play to the downside here. And we got that price excursion. Same thing. The open here is extremely important. Watch delta. Coming up here at the highs, right? We haven't turned green yet. What happens if we get through the open again? Now we should be seeing a price action swiftly move below this low to tell us that sellers are still in control of the market. And now see stronger delta coming in below this low, anticipation of this low to break. And if we don't, we come back through the open here. Any green delta is going to push us through the highs. And when I say push us through the highs of this current bar, not necessarily the highs of the previous bars, the current bar, right? Delta is only going to help us in the context of what's happening in current market. See here, we tried to move down on the green, on the red delta, or the green, or the purple delta. Not going to happen, right? What happens at the open? We shift the open and go green. We never got back to the open, and we never got green. So this bar was never telling us to go long based upon the delta. Now we're here at the low, right? Barely broke the low. Look at the high volume stepping in here, the high volume stepping in here. Okay. We don't know if that's sellers or buyers yet. If it's buyers, we're going to move back above VPOC. Okay. But we just got below it again and it just moved down. All right. Look at the stronger delta stepping into the market. Should be anticipating this low is going to break. And if it breaks, momentum. Tested VPOC, which just shifted, right? Immediately coming down. Look at the green delta. Now we're down below. No purple delta came in at all on that. Anticipate the high to be tested in this bar. Until we have delta coming in. When we're breaking through the lows, breaking through the open, testing the low, no purple delta yet. See? We didn't get enough delta in here to actually go negative on the delta, but we're not testing the highs yet. So if we break these lows here and delta turns purple at the same time, expect a continuation move to the downside swiftly. That means momentum. But see how we didn't create that shift here at all, and we came back up above the open on green delta and we're breaking the highs. That's how you utilize delta with price. Now I'm anticipating highs to be broken. Not just the high of this bar, regular highs. Like these two previous highs here, I'm anticipating them to break. I'm anticipating this pivot to break up here. I'm anticipating price action to come up and test VWAP right now. See how the delta never went purple there as we're testing into the lows. Now we're back above the open again on green, and the green increased on the open. Anticipate the high of this bar to be tested. We didn't test the highs there, so any purple delta we come in below the open, now we can test the lows. Okay? No purple delta came in below the open. Not yet, anyhow. We still haven't broke the highs, right? Same thing goes with this bar. Still anticipating the highs to break because of the previous bar and the strength and the green delta that we have here that's coming into this bar. The fact that we failed at the open. But if we didn't break those highs and we just tested, you'd be doing the same thing again around the lows. This bar here where we were anticipate to come in and break the highs, it didn't, but we did here on this bar. And so you had the continuation to the upside there. Rejection coming back in here at the same point that we were looking at before. Sellers are definitely holding this area, and buyers are holding the lows. And that's why you see this whole little area of consolidation here. And you have, what time is it? What time is it? 10:24. You have a very, very, very tight range on both the 2 hour and the 1 hour, the 4 hour and the 1 hour charts right now, meaning that we could get momentum stepping into the market here at some point in time to expand the range of those bars, either to the up or downside. Because we don't have a lot of bars that's as small as these bars. So you should be anticipating momentum to come into the market in one direction or the other, especially since we only have 36 minutes left on the hourly chart. And the range of this bar is pretty tight. We barely broke the high itself. We're holding the open, but we're unable to come back and test the highs again, just like we're seeing here. On the hourly chart, we're looking pretty bearish right now. But then on the 4 hour, we're looking bullish because we're above the close of the previous bar. And if we break out of this range, we could just trade right through here quickly. But I have an area here that's of fair importance. Well, we keep hitting our heads and bouncing off of it right here in this area where my cursor is at 311.25. See, we just keep hitting it, we just keep bouncing off of it. It's like it's a ceiling. And what happens when you hit your head on a ceiling too many times? Eventually you stop. And when that stops, what's going to happen? Buyer participation ends and the market rotates lower. Ram, is this helping you? You know what happens on this day. I don't. I have no idea what's going to happen, but is my analysis, is it helping? Not necessarily my trading right now, right? I'm over positioning. Dude, I truly believe day trade is best for scalping. Yeah, absolutely. Excuse me. Absolutely. You know, I kind of agree with you on that point as well, because when you can start to read the participants in the market, right? Then you can see in the context of your day trade of where you're anticipating price to go. But it could be so noisy sometimes that um that it's hard to hold and it's hard to do other things. I much prefer the scalping because I'm not telling the market where I think it's going to go. I'm not telling the market what to do. I'm just reacting to what the market's doing. And when I'm reacting and I'm reactive to the market, I'm much better as a trader than I am when I'm directing market action. What's the difference between the two? If I'm telling the market right now it's going up to VWAP, for example, okay, I'm directing what the market's going to do. But when I react to what the market is doing based upon my areas and my time frame, now I've got something for me, right? See people saying they hold for long 5 to 7 hour trades, but they can't do it every day. Whereas you can almost get a scalp trade every day, not saying it will be win or loss. Right. Right. And Jerry, and if you're quick at managing your positions, your expenses are going to be mostly tight. You're not going to have a lot of 1R expenses because if you're reading the market correctly, even look at here, right? The market's not going very far. But if you just take this one little area that I've been talking about all morning since we've been up here, right? You just take this one little area right here, right? That not a terrible scalping area, right? And then what would we be looking at for potential longs? This little area right here. Now, which one has the higher risk? The longs, because you're wrong down here. Where are you wrong at if you're short up here? Up here. Okay. So there's more risk to the long side right now than there is to the downside. And so you just take the scalps on the one with the smaller risk, and you have VWAP right up here holding yourself as resistance anyhow. So, it's the short side is the safest bet right now. And it just so happens that in this narrow bars and where we were before in the long-term charts, the long-term charts are telling us down as well. All right. The daily is telling us down from this area right up here. But I've seen people risking 500 up like 1500, watching it come back all the way down to break even. Yeah, right. But exactly. And they're up $1,500, right? And you're up 1,500, and then you just turn around and you give it all back, or you just take a 1-to-1, right? And then you don't have a place for reentry if it's going into the 2-to-1. But if you know how to scalp, you're going to take the profits eventually out of that 1,500. The problem is with the scalping, and this is where scalping becomes more difficult. Scalping becomes more difficult when we, excuse me, scalping becomes more difficult when our time frames are out of confluence. But what do you do when the time frame's out of confluence? You could just stop trading. You not even just trade that day, right? That's a possibility as well. Also, some people mistake scalping like as if we're taking 10 trades in 1 hour. It's more like one, take profit quick and move stop quickly. Yeah, that's it. And that means that last Thursday, that's how I had 53 trades in an hour. I literally had 53 trades in an hour, Jerry. Did you see that? Have I shown you the results of that day? Have you seen that on the Tradeify account? The 53 trades, 1600 in revenue, 1633 I think it was, something like that. If you've seen it, I don't want to just repeat the information. But you know what? Other people haven't seen it. Screw it. I'm just going to show it. Whatever. Doesn't really matter. I'm not doing this because I'm like, oh yeah, here, look at me. Right? This isn't an ego thing. This is scalping, right? And you can. Let me see. Oh, I don't have my phone on me. Hold on just a second. I'm going to be right back. Sorry about that. I had to get my phone so I could log in. Okay, so this is this is my trading for the last week. And this is where I'm saying I'm like, I've really got to figure out how to lock in on my higher time frame or on my trading in general. Okay. 53 trades, 1633. You see that, did you, Ram? Yeah. Yeah, I picked up a 34-inch monitor for chat and those type of things. But yeah, so the 1633 with 53 trades, right? None of those were expenses. I can't show you that in here because there's nothing in here that will actually show me the journal on Tradeify. I don't know if other ones will or not. But what caused my expense? I took a 1350 hit on a scalp on a micro or on a mini. That's too much. That's exactly what you're talking about, right? And so I went to Sim on this day after this happened, and I turned around. My next position was $1,600 in revenue on Sim. Would have turned this day into a $400 revenue day. Okay. I was also a little bit early on my entry for time frame. I entered before 9:45, right, on the original. And so then these 2 days here, the market, I was anticipating chop. I was just anticipating tight range rotation. That's exactly what happened. Here, I wasn't live. I went and traded on my own and 53 trades, and I just literally traded lights out. When Thursday, look at Thursday, and at the bottom, right, when it first came down on the day, we traded that range down there. I was trading that range and just scalping the bejesus out of it. All right. And then the 6 trades on Friday. Friday I didn't trade well. I did replayed Friday yesterday, and even on the live here, just the practicing, I was up $2,600. I'm not trading well live in this scenario, and that's why I'm practicing so much this weekend, is I'm working on that. How do I manage a red day? When I go into red day, I want to trade and turn it into profit. How can I avoid that? Give yourself a maximum expense day and then go on Sim. Okay. Give yourself a maximum expense day and what you're willing to expense on a particular day. All right. And then go on to Sim and continue to trade. And you want to do that for at least 30 days. Why 30 days is statistical days? And I know that 30 days of red days sounds like a lot. I get it. But just hear me out for a second. If you wait for your 30 days, this is what's going to happen. You're going to want to analyze your days on your Sim and analyze your days when you were red live. Okay. And see how many days you can trade yourself out of it. And that's going to give you your confidence to either say, okay, some days it's just not for me to trade, right? Whereas other days, I do really well. So you limit the risk on the days you don't trade well and the type of days you don't trade well. And then you're able to increase your revenue on the days that you do trade well. So if you got $1,000 drawdown, then yeah. So I think $100 is good for $25,000 account, right? So this is where it's difficult, right? It's a $25,000 account. You're talking about $100 drawdown. If you're trading one micro, yeah, absolutely, most definitely. Even 2 micros, yeah, you can still do it with 100. But if you're trading a mini, or you're trying to trade 3 or 4 micros, that might be too much. Or that might not be enough risk, is what I'm saying. And the $1,000 trailing drawdown, watermark trailing drawdown, is going to be very difficult to manage at that point in time. But if you're trading 1 or 2 micros and it's going to take you a while to get to 1,000, okay, you're not going to do it just, overnight. But what you will do is gain the consistency you need, the trust in yourself, your ability to know your methodology. That now you're going to be able to say, okay, you know what, in this type of market condition, I can get a bit more aggressive. But then if you do, you also have the consistency issue with you when it comes to these accounts as well. So just keep all of that in mind, right? And when you're keeping all of that in mind, think of it like this. That's a puzzle that needs to be solved. And what happens when you focus on a puzzle and you focus on a puzzle and you like, I can't figure this out, and you get irritated, right? You just put it down and you never touch it again. Okay. That's what can be, that can happen in this context as well. But if you leave yourself with an open mind and you know that there's a puzzle there and you're constantly open to new information to solve that puzzle, something's going to happen. You're going to have an experience, and that's going to give you the aha moment, and now the puzzle is solved. And nobody solved the puzzle for you. You solved the puzzle for yourself, and that's where the answer needs to come from. You got to unlock the door inside of you that's locking the information, keeping you from being able to solve your puzzle. And it takes time to do. And the only way to fix that is through focus. Continually focusing and have a positive expectation that you're going to get the result, because the result will be there as long as you're putting in the time, as long as you're putting in the practice, as long as you're putting in the intention, all of that, the practice, the focus into the intention of what it is that you want. The answer will come, and it'll unlock inside of you, and you have your aha moment. You're gonna be like, "Oh, Tony, you know what? I figured it out." And you're gonna be like, "Hey, what's up?" And you're like, "Tony, look, it's this. This is how I solve this problem." There you go. You got it. Nobody can give that for you, because it's kind of like, somebody giving you $1,000. What are you probably going to do? You're probably going to go out there and think, "Oh, well, I want this, I want this, I want this," and you're going to go out and spend it. But you earn the $1,000. You make the $1,000. And you're like, "You know what? Maybe I want to put this back for a rainy day." It's the same type of thing. Somebody gives you something, it goes back out. When you earn something, you own it. You take ownership of it, and it's yours. And it's yours for life. So I can probably go ahead and close these out. This is just one of those days that I'm not going to do all that well on. I can I can come in here and I can catch an entry 2 points away from the low of the day. But I can't turn that into $2,000 revenue. I am limited in my capabilities, my friends. Oh, that's so funny. It's good times. This was a great day. Bram, thank you so much for this day. I really do appreciate it. I need to trust the daily chart more, is what I need to do. I need to trust the daily chart, and even this is aligned to the daily. I took the short here as well, and even this short, I was 11 and a half to, I was only, 11 and a half, 17? Yeah, about 17 points off of calling the high of the day, and I was 2 points off of calling the low of the day, and I'm up $308. But today's just not a good day for scalping. It's just not. It was hard earned in here. And this is one of those days where day trading is absolutely going to be beneficial to you. And if you are day trading this, and Jerry, this might help you in the context of day trading too. If you're in here in the long, like I did here, okay, you break the high, right? You break these highs over here, not this high, you break these highs, okay? Your stop is here, okay? When you come up and you break this high, move your stop down here to the lows prior to this high. If you break this high up here, move your stop down to this low. If you break these highs up here, move your stop to this low. If you break this high up here, move your stop to this low. If you break this high up here, move your stop to this low until eventually you're stopped out. Okay? Why? Because a trend is what? You know what? You didn't even see any of that. God bless it. If you break this high, move your stop down to this low down here. If you break this high, if you're entered here, here's your initial stop right down here, below this low, right? Okay, any place down in here, it doesn't matter. Market comes up and makes this high, and it comes down and makes these lows. Well, now it's making higher highs, higher lows. Move your stop below the lower lows, okay? Or the higher lows, excuse me. Here's your lower low. Move your stop to the higher low. If it breaks here and it pulls back again, right? So it breaks this high here, comes up, move your stop to here, all right? Then it turns around and makes another pivot. If it breaks that pivot, move your stop below the low of that pivot, which is here. This is the pullback, right? So you're making higher highs and higher lows in the market, okay? And so to follow the trend, you're just scalping the trend itself. Higher high, lower low, you break the higher high, move your stop from here up to here. It does the same thing here, but this time it doesn't break this low. So you don't move the stop to this low. You get stopped out here at 40, 240, okay? 240 from, in my case, I was entered at, I can just tell you where I was entered at, I know the level, 88 to 240, almost 200 points, okay? Just by trading it. And then if you turn around and you take the short up here from this higher volume up here, right? Were you anticipating price action to retest again after a rejection bar? Okay, right here. So if you're entering short around the 11, okay, you do the same thing. So here, your stop is still up here. Don't even move your stop. Don't even trail it. Don't do anything. Don't touch it, okay? Move it. Keep it. Just keep it up here. Whatever your initial risk was. Move down, beautiful. Just let it go. When price action breaks this low, move your stop to above here. Now you're almost at a break even. Not quite, but almost. And then price action comes down, makes this higher high here, right? Don't move your stop until the low is broken, and then move your stop here. Why? Because the trend is lower lows, lower highs, and you're constantly moving your stop to your lower highs. And when you're in counter trend position, take partials at key levels. Absolutely. Yes. Most definitely. And so the short today is counter trend. And so where are your key levels at? Your key levels in a short would be value area low around 265 and a quarter. And you're looking at your entries around 311. So 265, you're still looking about 76 points on that key level. Where's your next area that I'd be looking at? I would be looking at the next level of my target. You might be looking at something else, but 138. 138 to me is another key level on the downside, right? Not so much the low volume shelf that we have at 176 or the high of that, but the high volume in there off the 30-minute chart right here, the key level of volume of 133.75, acting like a magnet to come into price, for price to come into. We're about 10 points off of that right now. And so when you're looking at key levels, you can look at volume, you can look at the value area itself, value area low, value area high, VPOC. You can go back here and look for periods of consolidation and the high volume areas of that consolidation. Like right in here, you got multiple VPOCs stacked together. What should you anticipate? Price action to come in as a magnet into this area. Okay. And those are all areas where you can take partial profits. And so if you're in multiple contracts, right, you could be in your stop is now here, okay, from an entry, right, at 54. And then your stop is here at 40 and a half. So 54 entry, let's say you're in with 4, you get up to 265, okay? 265, is that right? 254. No, the entry was up here. Excuse me. I'm sorry. So if you're entering around the 211 area, okay, 211 area, and you're looking at 265, all right, there's 76 points of revenue. You're out with 1, okay? You still hold 3. And in that context of hitting that, the 269 was right here. Okay. And so now you're in 3 contracts and your stop is right above. Well, once it breaks down through this low, your stop is now here at 1575. I wouldn't take a full 15. I wouldn't take a hit though on risk. I'd be moving my stop to a break even on that one to at least a 211, right? Probably 20, 30 points of revenue. And then as price action is coming down and you hit your next area, let's say it is your area 2. Let's see if I can find a good area 2. Let's call it value area low of developing value at 152. So you're out with another one at 152. So you're out with one at 269 and then out with another one at 152, which is right here. Okay, we just hit it. We hit it actually on this bar right here. So now you're out with 2. You're out with 2. So you're out with one at over 100. You're out with one at 78. So you're up about 178. And now your stop is up here at 275, 276, where you only have like 30 points of revenue, but you're only with 2 contracts. And so now you, with between the 30 revenue and the 170 that you were up through the 2 positions, you're up over 200 points on the position itself, trading at that point for, well, 3 contracts, because you're out with one at 70, you're out with another one at over 100, and then you're stopped out with one at 30. So that would be, your 200 points on 3 contracts. That's another way that you can manage your positions from scalps to day trades. Okay. What I used to do in the ES is I used to trade anywhere between 2 and 6 contracts, and all depends on the range of the market. Okay. And we were tighter ranges in the 2010s, right? So ES usually traded in a range of between 6 and 10 points, with 6 points usually within the context of the range. All right. And that's the range how I calculate range, right? Like right now, the range of the ES, I would call the range of the NASDAQ, not the ES, but the NASDAQ right now at almost 300 points. Okay. And there's no way it would be even close to that in between 2010 and 2020. So I used to trade the 6-point ranges. And when the market was 4 to 6 points in range, if it's less than 4 points, I just didn't trade. There's not enough room. But if it was 6 points, for example, I would enter and I would have 6 points of targets. I'd have, from my entry, I would put in targets at 1 point, 2 point, 3 point, 4 point, 5 point, 6 points. By the time the price action was 2.5 points in my favor, sometimes 3, I'm already moving at my stop to a break even. So I've already locked in a break even after my first couple have been hit. So I really took a scalping methodology and I turned it into, and I applied it to day trading is what I did. And then if the market widened, then I would decrease my position sizing. And then I would look at for, like, let's say 1.5 or 2 points for my first target. And then 4, 5, 6, or 4, like 2 points, let's say 4 points, and then 8 points. Okay. And then I would decrease it down to 2 contracts where I had about 15 points on one target and 6 or 7 on my first target because of volatility or anticipating price action to move farther. Okay. So that's how I managed those types of positions and really got myself to the point where I could have a scalp type trading methodology. What the hell area is this? What did I pick here? Jesus, are you kidding me? Anyways, that's where I took a scalping methodology and allowed me to take a scalp and turn it into a day trade all at the same time. And I normalized my risk. I always had 1.75 risk. In other words, I've not normalized it to a dollar amount. So I never took more than a $650 expense on any one given trade. And I was willing to take 2 full expense hits in one given day. If I had 2 expense trades in a day, I stopped. That was it. And then I had a profit factor that I was looking at every day. And once I hit that profit factor, I was done trading for the day. That way I couldn't overtrade and I couldn't do other things. That's how I first became profitable consistently in the markets, was through that type of methodology, because it allowed me to build the skills of scalping. It allowed me to learn how to hold in day trading, and allowed me to not normalize my risk and allow me to position into positions, position size into position, help me learn how to scale out of positions. It did all of that. It was a great methodology for training, and it worked well enough that it and I use the same areas. So I use this whole methodology in the same areas that I use today. My how I build my PMA, my areas, my structure has not changed at all from what I was doing before. What's changed is how I enter around those areas. And so I've been creating, other than the 6 years of a hiatus that I took from my retirement, I've been trading these same areas and building my plans around these same areas since 2012. I mean, yeah, since 2012, when I learned how to build my PMA, my pre-market analysis. And I haven't changed the way that I create my areas since then. I've added a few nuts and bolts to the process, we can say, but I haven't changed the foundation of how I build them. And so out of all the changes in market condition and volatility and those type of things, um, so yeah, so there's this day. This day is pretty much done now, right? Had some great areas. Didn't necessarily trade out of my areas well today. Um, I'm not I'm not convinced that I have a great entry methodology for all types of time frame trading at this point in time. But that's what practice is for. That's what we develop into in our practice, right? This is about creating our areas first and foremost, because our areas are our foundation, the key points of interest, right? KPOI, key points of interest. Once you can develop your key points of interest, they become your structure, your framework. Okay. And when you have your framework, now you can practice your entries around your framework. But it's very difficult to practice entries when your framework is changing all the time, or you're adjusting your framework, or you're doing this, or you're doing that. So make sure that you can make sure you have a good foundation of your framework before you attempt to do anything else. Okay? That's the key. Framework first. Let your framework be your foundation. Once you have your framework done, now start working on entries. Because if you do it the other way around, you're going to be so focused on your short-term chart that you're going to build habits around your short-term charts, and you're going to lose track of your key points of entry. and your higher time frames and what they're telling you. The other thing that tripped me up today too was I'm looking for a reversal off of much higher time frame charts. Well, the higher time frame charts are already coming against me, and I'm looking for a reversal. Of course, they're going to be down. Of course, they're going to be looking bearish, and I didn't put that into account today either. Learning, 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 learning. And this is what practice is for. And I've been out this for 30 years and I'm still learning, because every day there's still more practice, because every day you're faced with a new competitor, because every day the market moves a little bit differently than it did before. All right. It's no different than being a professional athlete. Professional athletes don't practice after 15, 20 years of being a professional. They continue to practice. Look at your greats: Tom Brady, Kobe Bryant, Magic Johnson, Jordan, of course, Larry Bird, LeBron James. All of these individuals, they practiced all the time. And these are the individuals that were usually on the court way after everybody already left. That's what it takes to be in a high performance industry. And trading is 100% a high performance industry. All right? So keep all of that in mind. It takes time. It takes time to develop. But in your development, start with your key points of your key points of interest. Start with your areas. Okay? From those areas, figure out your entry points and your entry criteria. From your entry criteria, start finding your consistency of your money management and the style of trading that you like. Because just because you might see scalping in your trading doesn't mean that it works with your psyche. Make sure that your first entry criteria is aligned to your natural capabilities or your natural flow of trading. That way, you can start trading something and be consistent with it and already have that trust inside yourself. And then when it comes to practice, start practicing the things that you're less comfortable with. And that's what's going to help you move into and being able to be more capable in trading, because you have more skills, because you adjusted your skill set. But start with a skill set that's most aligned to who you are currently as a trader, not farther away. That way you don't have to develop your psyche and those type of things. Build your trust as a trader to what you're currently aligned to. And you will know that once you have your key points of interest, you trust your key points of interest, you're going to know the style of trading that you're going to gravitate to, because you're going to just immediately do it. And if your key points of interest are good, it doesn't really matter what your trading strategy is. You're going to be trading around strong levels. And that's what matters more than anything else, is the strength of your levels. That's why you want to make that your foundation, because you build the house on top of the foundation. If you try to build a house, your entry criteria without a foundation, it's just going to topple. You don't believe me? Read The Three Little Pigs all over again, and you'll look at it from a different perspective. The markets is the wolf, and the three little pigs are building their houses, and they both of them get knocked down until they build one out of bricks on a foundation. The same exact thing. And Ram, we've already discussed it, right? The same exact area that got us into all of these positions for the scalps on the upside, the same exact entry criteria over here on both of these, here and here. Why this one as well? Because look here, right there. There's your test. In a higher low. All right, what's our next day? I want to do one more day this morning, then I'm going to go and spend a little time with family, kind of do my own thing for a few hours, and then I'm going to come back this afternoon and start streaming again. So anybody have another day for me? And if not, if y'all are gone, then that's fine. That's perfect. I can just go ahead and end the stream now, and come back to it here in a few hours. Probably around 3, I'm thinking, is what I will come back to. Next day is up to me. Oh, goodness. But did that help at all, Ram, in the context of what you were working on? I know I didn't manage the positions the best, but I think I was pretty spot on a couple of my areas. Hey, vote, how's it going? Vote for Nate. I like it. Okay, I'm voting for Nate. That's all I needed to hear. Nate, you got my vote. I think Nate needs to come on the stream. We're going to vote for Nate. I like it. I think that's a good idea. What do you think, Nate? Okay, so what are we at here in this particular day? This is July 2nd. I just went ahead and went to the next day. I love it. Well done. All right, let's get into it. Yeah, you made some mistakes to moving stop loss to break even quickly. Yeah, I don't know anything about that, Ram. I mean, I've never done that before. Are you kidding me? God, what a dumb mistake. Moving your stop loss too quick and going to break even too fast and missing out on a nice long move when you're entered in a long 2 points away from the low of the day. Oh yeah, terrible. I can't believe that anybody would absolutely do that, Ram. It's ridiculous. God, what terrible traders. Man. I crack myself up. At least I laugh at my own dumb jokes, right? Like dad jokes. Only dads laugh at dad jokes. It's all good. All right. We're going to start with and vote for Nate. Thanks so much for being here and watching. I truly do appreciate you. I don't take that lightly. So thank you so much for being here. February 29th, commentary. You know, it only works once, Jerry. All right. So here we are in the context of our value, right? We got potential developing value coming in here. And what do I say potential? Because we're not fully rotational. All we've done is we came down, right? We broke this previous range over here and we've come up into value area high. We have not come down into value area low yet. So we're not a fully rotational market. We could absolutely come up and test the value area high here. And if we do, we get rid of this developing value and we come in and we just trade the this whole area behind us. Okay, what this developing value is going to do for us is a couple of things. If we come down here into this area, a value area low, we can find support beneath us and go into long, anticipating price action to possibly move back into prior developing value because price action's moving in that context. Okay, if we turn around and come down and break through the lows, then we can look for a continuation play to the downside. All right. So that's kind of what we're looking at in the context of our longer term at the moment. Now, daily perspective. The first thing I want to do is clean up my charts here. I got way too many lines and too many things going on all at one time, and it's going to hurt my little pea brain if I don't do something with them. We'll leave that one up there. I mean, we're probably not going to go back up into the 30,600 range anytime soon, which is fine. We don't need to. I'm just going to keep that line up there because that's where we filled the gap in the first place. Way price action is behaving here in terms of the daily chart. I'm looking for, we're already in unfair lows, right, of the new developing profile. We didn't break the highs up here. We're trading down here in an inside bar day, and we have this high volume. If we get through this high volume here, if we get through that, anticipate a possible continuation play to the downside. I like that idea. I like that idea a lot, actually. Okay, so there's that. And then where we'd be looking for long positions at. Around 853 and a quarter. So 853, right down in here, right off of these lows. So this makes a lot of sense, actually. There's a lot of confluence going on in this day. This could be a fun day to trade. We're going to find out, but this could definitely be a fun day to trade. So we have this area right in here that we're looking for potential longs to come into the market. Okay. Right at the lows of this structure, which makes a lot of sense. If we get through this area in here, we're looking for a possible continuation to the down play. That's about 150 points. We have plenty of room for that context. We haven't moved back up into value area high yet. Without going into value area high, we should be looking at, we're making basically lower highs and lower lows throughout this whole process. We're looking at retesting the lows again from this area of rejection on the 30-minute chart. Yeah, I like that a lot. And then if we break through this area here, we're looking at a possibility of price moving down into 659 area. So if we're looking at 659, we're looking at a potential long area into, where's my line at? Right here. Into 659, which is right about there. Dang it. 672, 659, right there. Beautiful. So those are kind of the areas for the long. We know what we're looking at for the shorts. Do I see anything else in particular? Not really, no. Let's go ahead and hit play and get into this. Does anybody have any questions about any of that before I hit play? I just want to make sure nobody has any questions. I don't want to be ignoring everybody because once I go live and I'm trading, I really need to focus. So I'm not able to answer a lot of questions. So does anybody have any questions? All right, I don't see any questions. Let's just get into it. Do we remember what this level area is for? Is this just from a shorter time frame? Yeah, that's from a previous day. And then this is from the 30-minute. No, this is from the daily. This is that little area I was just talking about. Oh, this is beautiful. Okay, beautiful. We're in the high volume here. Oh, you know what? I'm going to take a little scalp here to the upside. May regret this, but I don't think so. And I'm just going to scalp this out with the momentum because we're just trading the momentum of the open. There we go. Well, that starts the morning out pretty well. Kind of like that. Yeah, I know. I'm crazy. I'm trading at the open. Sorry, everybody. I apologize for being nuts, but sometimes it just has to be done. Hey, Secret, how's it going? It's good to see you. Thank you for being here. Where are you from? Can I ask you that? Do you mind? Where are you from? Hey, Ab, how's it going? I'm sorry, I didn't even see you here. I am so sorry. I am not ignoring anybody. I'm just focusing on trading right now. And so I'm not trying to ignore anybody at all. If you feel like you're being ignored, I do apologize. Um, I don't want to hurt anybody's feelings or sensibilities by any stretch of imagination. If I can speak, it would be helpful. Okay. When you get the chance, are you able to deep dive on the volume profile in Delta? Or do you have, education on Discord for that? Yeah, what do you want? What do you want to know? What are your questions? Anything in specific? A deep dive into on the volume profile and Delta. That's kind of broad. That is kind of broad. Let's start with the volume profile. It's probably going to be a little bit easier because the volume profile is going to be done on the longer time frame charts. What are your main questions about the volume profile? And so I think I already asked you where you're from. I just don't remember. I'm sorry. It's not that I'm not interested or anything else. I'm asking for a particular reason of my own personal um, information because you are an extremely polite individual, and I truly appreciate you. Um, Okay, so you're broad and you don't know much about it, so you don't even know what to ask. I love it. Let's get into it. Secret, as I was saying, you're just a very polite individual. I don't know if that's from your pedigree or from your culture or what it is, but I do. I just really appreciate your politeness. You're just one of those positive individuals, and you're always very full of gratitude. Let that carry on in the rest of your life. You're from Indonesia. That's why I'm really seeing in your live chat. My time right now is night. Gotcha. That makes sense. Absolutely. Well, thank you so much for being here. Thank you so much for being you and just your kindness and your politeness and everything that goes along with that. Um, okay, I am going to jump in here. All right, you're on TikTok, Ab. Okay, beautiful. Okay. So this is what we're going to do. All right, we're just going to go into the volume profile. What this is this is the regular trading hours. So this is a US session. This is volume profiles, okay, that are being printed. Okay. We've been in an uptrend in this market. Okay. And in the market of the uptrend, okay, this is what's been happening. We came in, and you know what else? Oh my God. I swear to God, if I could be a little more consistent, I would be so much happier. And consistency comes from my charts being set up right. And RAM, my volume profile, is all outside of itself. Oh, irritates the bejesus of me when I do something stupid. Okay, anyways, Ab, I'm back. It's all good. All right, so all I'm doing right now is I'm taking all these profiles. See how these profiles are trading within the range of this current profile? And just adding it in to this profile. So we can get a big picture of what the market's doing. Because the market was trending, and the market was trending all the way up here through June 3rd until it wasn't. But then everybody's like, oh, well, the market's trading down. No, it's not. It's trading in a range. And this is the range that it's trading. And how do you know you're trading in a range? Because every single day, you just keep adding another day into the range because we're trading in a range. It really is that simple in this context. Okay. Now, in the context of the range, this is what we're doing. We had a gap here on this day, and we came up the previous day and we tested the value area high of that gap. That's filling the gap. We filled the gap, and we filled the gap on a nice big up day. Okay, we trended these particular 2 days, but we trended in value. But how did we start trending in value? We started down here in value area low and unfair lows, right? Well, we started first in unfair highs, and then we gapped down. So the gap happens in the overnight. So if you put the ETF on here, okay, which is, or the ETH, I mean, I'm sorry, not ETF, but ETH. If you put the ETH, the gap's going to be gone. Because we did this move in the overnights, okay? That move down happened in the overnights. And then here's the test, right? So what happens is we are in value, but even in value, the market can still trend. But we're not in a trend, we're trading in value. Does that make sense? Really need to understand that concept before we move forward, okay? So let me explain it this way, all right? We're trading in value, okay, in these time frames. This is a daily, right? We're trading an overall value on a daily perspective. But if you look at like a higher time frame chart, right, we're trending. So we can trend at times on I say a higher time frame chart, like on a 60-minute, we can trend, right? But that trend is just an overall value of a daily perspective, okay? So when we're trending, okay, in the shorter time frame, we have to look at it as in context of the longer term. We're trading in value. So trend in overall value to a place of interest. You can short in this area because you're anticipating to go back into the other side of value to value area low. Why? Because you're not trending on the daily chart, you're rotational. So you're not expecting the trend to continue in this perspective because you're trading an overall value or in a range of the daily chart. Does that make sense? Okay, beautiful. That's making sense within the range. Perfect. Okay, so we filled the gap, right? So what we're going to do is we're going to add in one more because I want to keep this gap day in here because this area here is of importance. Now, what are we doing? We're currently trading in this area of value. We came off of this gap fill. We didn't quite make it back up into value area high. So price action is going to do one of two things here. We're either going to move up and retest these highs and come up here possibly into value area high and test that, or we're going to come through this area, move back down into the value area low area, or testing these lows from this gap test here. Okay, those are the scenarios that we should be looking at here because of the rotation that we are in. And we're key areas that we could be looking at for participation, all this on the daily chart. You can always look at VPOC, volume point of control, where the most volume has traded at, value area high, VPOC, the close, the high, value area high. These are all areas that could be of interest to us depending on what the higher time frames are telling us. And when I say higher time frames, I'm talking about 30-minute and above. Okay. The daily, look at that as the highest time frame. So even though the daily is the highest time frame, we still look at the 30 on up to like the 4 hour as the higher time frames. Just in a copy of what I posted, you might want to go over. Absolutely. Thanks, Vito. You're so amazing. I appreciate you. Seriously. I'll take a look at it here in just a little bit. Now, let's look at the profiles themselves so you can understand what's going on within each one of the profiles. So what the profiles are doing is it's taking the 70% of value of volume. Okay, it's taking the full day's range. So this right here, this low to up here is a range. Okay, and that's the range of the US session. And what it's taking is this range is all volume. And so it's taking 70% of the volume was traded from this little line here to this little line here. And we call this colored area value. This is where price action found value and 70% of all volume traded in this area. Okay, here's the day's range, but 70% of all volume traded in this range here, the colored range. We have this magenta line here, which is what we call VPOC, volume point of control. That's where the most volume traded within the context of the full range. More volume traded here than anywhere else. For volume to collect in an area, it usually takes time. Price rotates around an area, okay? And it creates high volume. The most time spent with the highest volume is right here at the VPOC. Acts as a magnet. This is why we want to index this VPOC here on a gap, because we're anticipating price to come back and test that area after the gap. Okay, which is exactly what happened. That's what we call a gap fill. Okay, since then, price action has come back down. Where do we come back down to? We completely 100% retraced this large buy bar, right, on the daily perspective. And we came right back into VPOC of the last up move from the rejection below us. So this area becomes an area of importance for us, of possible support. Why? Price action came into this area like a magnet, right? And we're currently rejecting off the area. And where are we looking at price to go back to? Here, which is this VPOC and this VPOC up here, possibly this one. Right? That's kind of the context of what we're looking at in the market. What does auction market theory help you with? One, it helps you understand the auction. What is an auction? An auction is simply, and I explain the same way to everybody, so I apologize if I sound like a broken record. An auction is the result of price and what the participants did. So the participants act in an auction, and the result of the participants is price. So what is price? Price is the result of the participants in the market. Who are the participants? Volume. So we look for areas of participants that have meaning. We call these key points of interest. So we have key points of interest based upon participants of what price has been doing, okay? And we want to use those to give us key entries or key areas to hone in on the short-term charts for entries. And we do this before the market even opens. You really helped me to complete my understanding of auction market theory, order flow, and psychology. Thank you, Tony. Of course, Secret. Of course, that's what I'm here for. I didn't do anything. I facilitated an educational process that you made your own, and that's where the changes came from. The changes come from you guys. I'm not a guru. I'm not a teacher. I'm not anything else. I'm simply here as an individual to share knowledge with you all. The way you interpret that knowledge is your business. And if you're interpreting it in a way where you're open to learning, you're open to facilitating new information, you're open to trying things, you're open to practice, you're going to see results. Not because of the education you learned, but because how you applied the education. So give yourself a pat on the back, Secret. You've done the work. Well done. All right. And so we're looking in keying in areas, but a daily chart, it's not necessarily enough to just key into areas. So we're going to go into a shorter time frame chart. And in here, we're going to create custom profiles. So here, where the profiles are built for us in the daily chart, we're going to create custom profiles. Now, how do you create a custom profile? That's going to be the next question somebody's going to ask. Beautiful. Let's just get into it before the question's even asked. There's multiple ways of creating these profiles. Okay, multiple ways of creating these profiles. I'm going to show you the way that I do it. I'm going to explain to you why I do it. But first, I'm going to show you what most people do. Most people will turn around and build these profiles and tell you to build them off of key bars, right? Rejection bars, for example. No. And this is why. You can. There's nothing wrong with that. But there's something that's being missed if you're doing it that way. An auction can move in 3 different ways. An auction can move up, imbalanced market condition higher, right, which is a trend to the upside. Imbalanced market condition lower, which is a trend to the downside. And consolidation, sideways price action, which is balance. Okay? Those are the 3 things the market can do. The market can't do anything else than those 3 things. Now, the range that it's in can determine, other things. But those are the only 3 things the market can do, because the market's never going to go flat. All right? So we can trend to the upside, trend to the downside, and we can go into a range of balance. Okay? We call it imbalanced market conditions higher, imbalanced market condition lower, and balance. All right? In that context, the market can never shift from one condition to another without a market mechanism, a shift. Okay? Again, the market cannot shift from those conditions without some form of mechanism that causes the shift. I draw my volume profiles, my custom volume profiles, off of those market shifts. What is the market shift that I'm talking about? Price action is trading in this range. Price action was trading in this range. What happened? We traded in the range until we got a close above this range. That close above becomes the market shift bar. This bar is either going to cause the market to move directionally in the direction of the breakout. So we're directionally long, right? The breakout happens to the upside. Price action can either continue to move to the upside, it can consolidate into a tight range, which it did, or it can move back down into previous value. All right. Those are the only things that the market can do off of a market shift bar. But the market shift bar is extremely important because it's the one that's telling you something is happening in the market that's different from what it was doing before. Before it was imbalance. Now we're in a breakout. But a breakout doesn't mean a long trend. Most individuals will teach, oh, well, it's a breakout. We're going to go long in the direction of the breakout. We're going to go short in the direction of the breakout. Wait, no. It's merely a market shift, and we don't know what the market's going to do yet. So these bars are key because they give us an indication that something's shifting in the market. And we need to take that information and we need to look at it very closely because there's a market shift happening. And the market shift is either going to make it move into a consolidation, trend, or move back into lower areas of value or previous value. What did we do? Moved into previous value, but we didn't move back into value. Moving back into value, which means we would move from value area high down to value area low, and now we're rotational in this area. If we ended up doing that, then this little area balance would be deleted, and we move this all the way over to current bar, and now that becomes our area of balance again. So you never want to delete your previous area of balance after a breakout because we can always move back into that area of balance and we're going to want that area again. All right. So that's one way. Now we're going to do it again here because we just had another one for this particular day. Price action comes up, right? Comes up, trends a little bit, comes down. We're moving back up into value area high. Okay, but we're not in true balance in here. Why? Because we haven't touched value area high again. Okay, so price action can move down, move back down into previous area of value, or we can move up into value area high and confirm this area is balance. Those are the 2 things that we're looking at in this particular day. Makes it a little bit more difficult and a little bit more tricky to trade because we're not necessarily in an area of balance and we're not necessarily in a trend. All right. So in this portion of a day, I personally would lean farther away from intraday trading, day trading, and move more into a scalping technique because market is not currently in balance and I don't have verified areas that I could absolutely trade around in the context of intraday or swing trading, because I don't know which direction the market's necessarily going to go in right now, because we're in a market shift and we haven't confirmed a trend, or we haven't confirmed balance. Any questions on that, Ab? I just threw a ton of information at you. Any questions? And I'm going to go ahead and delete this profile real quick so you can see. The low is here, right? And what did we do? We closed below that low. And so now we need a profile here. That goes basically right there. And then we need another profile right after that, which goes into here. And that's our area. And we're still not quite balanced. Balance will come in down through here at this low. Okay. And that's why down through here is not a bad place to look for potential shorts in the market if we close below there for a possible continuation move down into prior value. No, it's making sense so far. I'm just absorbing all I can. Absolutely. And I do this a lot, and it's just repetition. And of course, this is recorded, right? So jot down the title of this video, find it over in Discord, and just keep rewatching it, download it, whatever it might be, right? Keep absorbing this information, because this is how you want to build your plans. You want to first build your key points of interest. Those are your foundation. You're going to be learning how to trade out of those areas. You got to trust your areas. You got to know that they work. And the only way to do that is to build them and see how they work over time. Okay. And then make adjustments to them as you get more information. Oh, wow, I totally missed this area here. I should have put this area in. Well, then put that into context the next time you build your plans and make sure you include that area. Okay. And whatever it might be. All right. Learn to trust your key points of interest, because when you go to your shorter time frame charts, you're going to start building your trading plan and how you're going to enter around those key points of interest. If you trust your key points of interests, it's going to be easier to trade around them. Hold on just a second. Come in. It will be easier to trade around them. Okay. So you got to trust your key points of interest. They're your foundation. Go back to the three little pigs. Okay. The foundation, the house that you build, right? If it's not built on a foundation, it's just quickly built on the short-term charts, it's going to topple over, because the wolf is the markets. And the market is going to be stronger than any short-term chart you can possibly imagine, or any technique you have on short-term charts. What you want to do is understand the market, understand the wolf itself, and build a structure that's going to withstand the wolf. And that's trusting your key points of interest. And when you have that, you have your foundation. And then you come over here to your short-term charts and you build your house. And you build your house on top of a foundation. And if you do that and you consistently work at it and you consistently develop it and you consistently build it through practice, through time, through dedication, right? Dedication, determination, motivation, discipline. It doesn't happen because you build those ideas inside of you. They all happen because you practice them, because you make them a part of who you are. And the only way to do that is through practice. It's not, oh, wow, all of a sudden I'm just disciplined because, oh man, I'm thinking I'm disciplined. It just became disciplined. No, you have to take the action. Okay, that builds the discipline, that builds the determination. All right. And so then once you have your key points of interest, you trust your key points of interest. Now you've earned the right to go into the short-term charts and look for your entry criteria around them. How do you see the delta in the volume profile? Okay. You don't see delta in the volume profile. Volume profile, you can change it and bring in delta only if you want to. I believe you can anyhow. Let me double check before I say something stupid and it's not right. Let's see. Let me see. Volume composite right here. So volume, how do you change it? You can add this to just delta. You can do delta and total volume. You can do delta, just delta alone, delta percentage, or volume. Okay. To me, all market participants are important. Okay. Using delta only is like saying, I'm only going to watch this small percentage of auction participants because these individuals are more important than others. Okay. I feel like the totality of all orders of all participants is the most important thing to see in this perspective. When you go to the short-term charts, total volume is still important, but now we add in the mix of delta, which is just the market orders, right? So here we had a long, strong market orders to the downside, a lot of sellers coming into the market, and then we have the buyers stepping in. And this is a lot of buyers stepping into the market, right? Where we barely broke open the open, but we held the open with the buyers with a ton of sellers that came in through this tail, right? We should anticipate price action to continue to the upside here, possibly even test this high here because Delta's stepping back in and we immediately opened, we came down, a little tiny bit of purple Delta came in, right, down Delta, but then buyers immediately stepped in as soon as we went into the open and they're carrying through and following through for the prior direction. Same thing here. Price action came down swiftly, right? We came up, we opened here on this bar, okay? This came down swiftly. Look at the delta, okay? Almost closed off of its low, okay? Here you can anticipate a little bit of a pullback. Pullback where? Probably to your high volume here, right? Then delta turns around and goes purple again as we break through the open, and there's your scalp to the downside. Expecting follow through. The same thing here on this bar. Okay, price action opened up, probably came up first, and then came back down. Purple delta came in at the low, delta rejected. I took a long in here. Why? Because I'm in this area. We came above this high volume. If we came above this high volume, this isn't volume that's developing from sellers. It's volume that's probably developing of buyers. Why? Because we came through here, this high volume, we spent time here, we came down, broke these lows on very low volume, came back up again above the high volume, and came in here where now we're anticipating buyers to support the area because they've been supporting this whole area. If it was sellers that were supporting this area, we would have blown right through this area because of this high volume that was in here. So we should be anticipating price action to move higher now based upon delta. That's just delta analysis. Not saying it's going to happen, not saying it will happen. That's just a delta area. Now, where do we take areas from? We take areas from low volume nodes and unfair highs. What does that mean? Price action traded up here, but it's not part of the 30%, or it's part of the 70%. It's part of the 30%, right? Lower volume in these areas. We call them unfair lows and unfair highs. And what we're looking for is low volume nodes. As price action rotates around high volume, spends time there, creates the high volume, look at it in reverse. Price action didn't spend a lot of time in an area. What should you anticipate? Possible rejection. Price action rotates around areas of high volume and spends time there. Price action spends very little time in low volume areas. We should be anticipating rejection. And if we're expecting rotation, value area low to value area high, we would be anticipating price action to not spend a lot of time in this area and to turn around and reject from this area, giving us a place to enter with the anticipation of price action rotating back up into value area high. Similarly, when going up here into value area high, right, price action comes up into this area of low volume, we should be anticipating rejection and price action moving back down into lower areas of value. That's how you read your volume profiles to get areas of interest. Today's a little bit different. We're not in value, we're not trending. So what are we looking for? Possible continuation play to the downside. If price action breaks through here, pull back and look for a potential short position, okay? Around the 29,800 range, all right? And then if price action holds this area, we can turn around and look for a long position coming out of that same area. All right. And when I say 29,800, it's like 29,826 to about 861, right around in there. 861.75 is right there. And so we can absolutely buy this area here. If this area fails and we get stopped out, that's fine. It's okay. What we do is we wait for a pattern to emerge, higher high, higher low, and look for a new entry off of that sort of pattern developing. And if price action gets below this area, then we can turn around and sell it. And then what happens if price action just moves higher, right? Well, if we move higher, we're going to move up into this area in here. We have a low volume node up here. We can look for a potential sell in the market because now we're rotational. Now, they have to come down here first. So market has to come down to value area low, then back up into value area high. Now we're rotational, okay? Because the moment we hit value area low, we're rotational. That's why we're willing to take positions down in here. If we come back up here, now we become rotational. So if the market just immediately comes up here, we don't want to do anything from this area. Market comes down to this area down here, now we can take action up here. And in that action up there, we're looking for, just like I set this up down here, short positions from this area. But again, only if we become rotational. You don't want to short this area unless it's rotation. And then where's the other area we're looking at? If price action breaks through these unfair lows, or these unfair highs, excuse me, we can move back up into previous area of value. And then we would be running this as an extension to the current bar and looking for a test into here. And if that were to happen, then we could be looking for short positions up here, just like we would be. The same type of philosophy of entry as we have down here, looking for test, pullback. Well, test, pullback, test again, short. Does that make sense? Can you re-explain what you mean when you say rotation? Because you'll only enter if it's rotational. Okay, so rotation. This is rotation. Value area high, value area low, value area high, value area low, value area high, value area low. Comes back up again, value area high. That's not rotation because we didn't come down here into value area low. We didn't come back up into your value area high. So this is no longer rotation within the overall range. Something else is happening here, but we're still in rotation, okay? What do I mean by that? We haven't done a breakout, so we don't need to create a new value area, right? It's just when price action comes up here and comes back down to here, okay, we're no longer in value. And so instead of, we're in value, but we're no longer trading around value. So if you're going to go long down here, what you want to do is target like VWAP, target something like that instead of looking for a full rotational market until the market becomes rotational again. So this is what rotation means. And it doesn't matter if we're hitting above value. What matters is that we're trading between value area high, value area low. That's rotation. We're trading around the rotation, the 70% of the of volume that is traded around the range. Beautiful. And thank you for letting me know that you get it too, because I have a tendency to kind of over-explain things a little bit every once in a while because everybody learns differently. So I'm trying to explain it in a few different ways to help it click, if that makes any sense. All right, let's get into it. So we have our areas, right? We're already looking for a continuation here, okay? Continuation means higher highs of this bar, not necessarily higher highs of what the market's of the previous bar. Already answered that question. Okay, good. Okay. And remember what we're looking at for our plan right now. We're looking at this price action to come down at the moment, right? Before we can actually go looking for long positions, and we're waiting for the market to come up before we can actually come in and start looking for short positions. So we have to give this market a little bit of time here to figure out what it wants to do before we can enter the market. And I already went long in here, right, off of the open, as we did come into the area. We had the rejection. We got above here, so I went long right in here. I just scalped out as it was going back up again. I moved my stop right below this low. That's not for the faint of heart. Don't trade around the open unless you have a lot of trust in your areas. But once you start gathering the trust in the areas, then you'll know when it's okay to trade around the open and when it's not. Most individuals will say that trading around the open is gambling, and they're not wrong in most cases. But in some cases, when you come directly into an area just like this and you see the rejection, and it makes sense and it's aligned to a longer time frame chart, there's no reason not to take positions in that. Sometimes just make sure you immediately put your stop in case the volatility comes in and stops you out. Veto. I'm not ignoring you, sir, I promise. Isn't that the truth? We're only just one tweet away. Yeah. You're amazing. I love you, man. You're the best. I truly appreciate you. Truly, truly, truly appreciate you. Good work. I mean, I don't even know if telling you good work is the right thing, because you're just so consistent with it, that it's like second nature to you. But thank you so much for sharing the information. Truly appreciate you. Truly appreciate you. So price action VPOC at the moment on developing value is, where is that? It's right here, whatever this price is, 146.25. But we need to see it come up here a little bit higher. We need to see it come up here into, that's still not high enough. We need to see it come into here around 3019 is what we want to see. We want to see price action come into that area, 3030, was it 30,019? I should mark it. I don't need to because it's on the 30-minute chart. Yeah, 30,019 right there. It's right above this green line. And what is this green line? It's one standard deviation away from current VWAP. So VWAP's below us. We have the first band here, and right above that first band is value area high. If we get into that value area high, we are now in a rotational. Oh, no, we're not in a rotational market condition. We have to get down below the value area low first. Never mind. I'm going to shut up now before I confuse anybody, because I just about confused myself. Anyways, good times. It's just the market condition that we're in, right? It's nothing bad. It's nothing anything else. And you could have absolutely shorted up here, Tony. Why aren't you thinking right now? 149.5. 149.5. What are we looking at? Oh yeah, absolutely. I want to be short in this market right now. I'm short way too low, so I have a pretty wide stop right now. I should be short up here in the 39.75 area is what I should be. Looking for price action to continue down here. 254. Market's moving a little bit fast here. It's kind of hard for me to call that out, but there we go. There's a second position for the day. What specifically are you looking for when marking out those yellow box zones above and below the 70%? Low volume. Low volume nodes. That's it. This is from the structure of the low, okay, for the breakout to the downside, okay. This, low volume, just low volume node. That's all it is. See how you have low volume here? See how you have low volume here? I'm not picking this low volume because it's in value, right? And then there's not really another low volume, and then a little bit of a low volume shelf here, but that's all part of this structure down here. I'm not too concerned about that. No, you're good. You're good. Excellent question. There's no dumb questions here. You know, everybody, this is an education environment. And if you don't feel safe asking questions in an education environment, then you're dealing with a teacher that's not right for you. You need to be comfortable to be able to ask any questions. There's no oops, there's no anything else, right? The moment you feel judged, it's not the educator for you, because we're not here to judge each other. We're here to learn. And when you feel judged and you're judging yourself, you're not open to the learning process, because you're like, oh, well, what are they going to think about this? Or what are they going to think about that? Or what am I thinking about this, right? We're too much in our heads. And if we're that far in our heads, what are we not doing? We're not emptying our cup, being open to new information. We're rejecting the information through our own judgments or expectation of judgment. So relax. It's all good. It's all good up in the hood, homie. We're just here to learn and to practice together, facilitate together, community. And in community, if you're feeling judged, it's not the right community for you. And try to get back into another short position here if it comes up here and test this. My stop will be right up here. So there's the entry. I'm fiddling in the middle is what I'm doing, DJ. And I don't know how to exactly to stop doing that, because I don't know exactly what fiddling in the middle actually really means in the context of all of this. And so I'm listening to you, 100% listening to you about don't fiddle in the middle, right? 100%. I just don't know the full context of that and how to completely stop doing it, because I don't know exactly what that fully looks like. It's a great comment. I love the comment and I understand where it's coming from. I just don't understand necessarily how to see it within the markets. And I'm saying that because right now, to me, I could be in the middle and I could be fiddling in the middle, but I don't know if I am or not, because I don't know exactly how to define the middle. So I'm saying that to let you know that I'm listening to you, right? But that in the context of understanding, of listening, I don't have the full context of understanding. Why did I move that stop to a break even there? I moved it to a break even because of how it kept on moving up and going into the buying and rejecting the lows. And if we didn't break the lows, I didn't want to be in it anymore. Oh, we got some nice volatility here. Well, thank you so much, market. I so appreciate you this morning. That was a wonderful little trade right there. A little bit of pain as it's going in here. You know, you're trying to figure out exactly what it's doing, as it didn't just pop in with the momentum, but once that momentum started, wow, that was nice. And now we're looking for the continuation to the downside. Guys, I have finally locked myself in. I have finally locked myself in trading in the stream. Oh, if I can do this, oh my God, it's all over. If I can do this consistently and I can do this while trading live, oh my God, this is going to be so much fun. I'm trading right now. I'm trading. I'm rocking and rolling. You know, for me, fiddle in the middle is the high volume and around previous day and previous week point of control area. Yeah, I don't know. I mean, maybe I'm just one of those individuals that likes the middle. And if I am, that's okay. Maybe I just need to fiddle in the middle all the time. I don't know. Are we all different? Or do we listen? And then what is the middle? I don't know. But I like the statement. I like the statement a lot because apparently I like to fiddle in the middle because I do it enough. And if Vito is saying that that's bad and not do it, then I should probably break the bad habit if I have a bad habit. But oh my God, I kind of like what I'm doing right now. I have to admit, I kind of like this. Looking for a continuation to the upside still. And remember, right? We're not in rotation or anything else here, so I don't really have a middle to fiddle with in the first place because we're not even in value, right? We're trading in a market construction and condition right now that is not either long or short. So there's really no middle to fiddle with in the first place, and this is the middle that you're not supposed to fiddle with because this is the middle where there's no context. I don't know. See, now I just confused myself with the whole thing. I need to just shut up now. Shut up, Tony. Jesus. And DJ's not saying anything right now. So, Vito, he ain't saying jack. He's just going to make me wait. It's so rude. Why you gotta do me like that, Vito? He's probably not here anymore. That's what's going on. I know. But still, I can talk trash. It's okay. We can go meet at the playground later and have a fist fight if he doesn't like it. I say that because he told me a story of what they do on the pits when there was disagreements and stuff that they used to in between the World Trade Centers where the trading floor was for the oil pits. Um, they would, when there was a dispute, they would go out to this statue that's still there. I guess I don't remember what statue it was, but they would literally just have a fist fight, and then they would all go to the bar afterwards, and that's how they did the disputes. And if your disputes continued after that fist fight, then you were fired. So, that's where the whole fist fight came into play. So I don't want anybody thinking that I'm like, I actually want to fight people. Although, I'm kidding. So price action's continuing up here, right? Through VWAP. I took my little area, I took my little scalp, just dodging and weaving here. We're not looking for necessarily direction. There's another possible short position that I could possibly bop into right here as well. Again, fiddling in the middle. Let's see if it hurts me or not. Because I'm fiddling in the middle. I love that. I love that statement. I really do. I don't know why. Maybe because I'm a kid. I'm just a kid. It's a great song too, by the way. And look, see the delta here. We're looking for a continuation here on this bar to the upside. Anyhow, see we get there the open, but delta doesn't shift. Now this is where I'm going to get a little bit aggressive with my stop. And let it rotate enough times, and it's not doing what I would anticipate it to do, so I want to be out. And picked up a few dollars there, up 1,050 now. And it's not even 9:45 yet in the morning. Let's go. See what happens when you practice, ladies and gentlemen, boys and girls? Mainly because I can trade those areas. Maybe because you can't trade those areas. You can't trade high volume areas around previous day and previous week point of control. Well, the high volume area of the previous day can, we're about ready to hit that right now. We're about ready to hit that at the moment. In fact, we're hitting that right now. So what do we anticipate? A little bit of rotation in the market. What are we getting at the moment? As soon as we hit it, a little bit of rotation. But if you're VPOC, right, what should you do? Anticipate it to spend time in this area. And if it's spending time in the area, what do you have? You have time to wait for the setup, for the entry. You don't have to just enter the area like down here, right? Or down here. You can wait. You can wait for it to develop. But I'm going to put a nice little area in right here, right here. And then I'm going to put another one. Not yet. We'll wait for that. we'll wait for that, but this little area right here, that little area, sorry, I put it on the wrong chart. I put it on a chart. It's the same chart that I have over here, but I don't have to move things around this way. That right there, this little area right here. I like this little area. I want it to come up into this little area, but it's coming off of VPOC right now. Okay, you know what? Screw it. I'm going short right here. If it gives it to me. It may not, but I want to go short from right here. Deep Charts seems more beginner friendly then absolutely. Deep Charts doesn't have a lot of bells and whistles. It doesn't have a lot of things going on at all. It's stripped down. As you notice, I don't have a single indicator on my charts. The only thing I have could be indicator related on my charts is a VWAP, right? I guess you could say footprints and those type of things are indicators, but I don't really look at them as indicators. Indicators are moving averages, envelopes, MACDs, different things along those lines. Keltner channels, stochastics, we all know what indicators are. I don't even have a moving average on my charts. I don't even even on my daily or whatever, I don't have a 50 or 200 moving average. I could care less what any of that information is telling me. And so it doesn't have a lot of the capabilities when it comes to the indicators. But check this out though. You want to see something cool? I'll show you Ab. Watch this. Your candlesticks. Let's take this off for you just so you know. Are now volume profile charts. And that's all you need to do right there in order to be able to put your volume profile up on your charts. That's it. It's really that simple in order to be able to create your footprint charts. And you don't need anything else in your footprint charts than just that. You don't need all the colors and different things along those lines. These dots here, these are their deep charts, deep prints. I was using them at first. It can help you, define support resistance levels a little bit if you're having problems seeing them in your own. But now I could just remove them. I don't even use them anymore. And just out of curiosity, for this, I would absolutely do something like that. But then if I entered more here, right about there, maybe? Right about there. Okay. Yeah, we can do that. Just in case this comes in here, I can scalp this position, and this will be possibly for this will be more for a longer term position, possibly. In other words, longer term is more of a trend directional trade and holding, where this will be more of a scalp. But if it comes through up here and it breaks through this high volume up here above us, we can absolutely break the high. And if we break the high, we're coming up here. And this is the position I really want to be in. But if we hold this area, if we hold it, I still want to be in because we're really close to this area here. Really close to this area here. And this is a key area for me right here. Oh, and look, we're at value area high on developing profile. Wow, look at how it all kind of just moves into confluence all on its little own lonesome. I love it. I love trading. I love trading and I love being me in the markets. It's a great combination. I mean, how many times do you hear people say, they love being me? I love being me because I love being me. And I can tell you that most of my life, I didn't feel that way about myself or life. And so it's a very humbling experience for me. I'm so grateful that I'm having that experience now because I do absolutely love life and I love being me. What price are we at here? 22.25. Are you sure? Yeah, I am sure. Just leave me alone, please. 22.25 now. Okay, good. So now we're risking 480. Now market structure below us. Looking for VPOC. I want to be out with 4 around 137.5. So if I can go down here to 137.5, I want to be out with 4 of these down here. 4 of them at 136.25. No, I want to be about 138.5. Perfect. Now this should act like a magnet to price. This could act as a magnet to price. Let me reframe what I just said there. And I should already be moved at a stop event here because of the way this broke out here, but I didn't. I was talking and not paying attention. This is where I lose trust in myself a little bit in my own trading, is when I'm talking and I'm explaining something and then I miss out this right here coming down here. I'm looking at this position as being a potential longer term play, right? But this came into the risk structure of a scalp and I should be out of the market. And this is where I shift myself from out of the zone. And because I lose trust in my own self because I didn't act there accordingly to the way that I felt like I should act. And I just did it again because I'm hoping and praying that it comes into this area. That is good information to have. What's happening here is I'm having a very difficult time shifting from when I'm going to scalp comparatively when I'm going to day trade. And I'm going to take an expense trade here because I didn't stay with my scalping technique. Because all of a sudden now I'm moving into this is what happened. Damn it. Damn it. This is such a great lesson. This is what happened. Oh my God. No wonder why I just lost trust in myself. This is why we practice, guys. Because of the insights that we get of our own selves and our own trading. Okay, let me show you just what happened there. We are not in a rotational market. Okay, again, we are not in a rotational market. And I just took a position off of a longer time frame chart to go into a short, okay, in 2 different places. I put my target in to VPOC, volume point of control, on the 30-minute chart. Okay, that's what I just did. I just did that. You just witnessed it. This would be great if we're in a rotational market. We're not in a rotational market here. We started off down here, value area low, and we're coming up to value area high. We're not in rotation until we get back into value area low. I'm saying that because we're in value area high, we're going to shift from this position of basically an imbalanced market condition higher from this time frame, and we're going to go in rotation. I just made a huge mistake. Rather, I should have not put my target in here, and I should have come in and said, okay, I'm scalping this. And the moment we make this low and we pop back up and we tested the open again, I should have already had my stop to a break even, and I didn't do it. That turned into an expense trade, and it gave me the opportunity to do it again, and I still didn't act, and I took a full expense trade. Lessons. And these are the lessons that we're able to learn in practice, and they're only going to make you better in the context of overall trading at the live edge. That was a complete mistake. I own that mistake. I recognize that mistake. I see that mistake. And it's not because it was an expense trade. And I'm not saying that I shouldn't be in expense trades. I'm not trying to explain away expense trades. I came out of in the last session, I realized that I have a hard time trading in this environment because I can do something to lose trust in my own analysis. And when I lose trust in my own analysis, what happens is I really want to perform well for you guys. And so I lose trust in my analysis, and then the whole performance anxiety comes in. It takes me out of the zone really, really fast. And I don't know how to get back into the zone. Okay. In this position here, when it came down and I didn't get myself out with a stop to a break even, I I felt that loss of trust in myself. Okay. And as it's coming down and we went back through the open again, I'd already put my target down here to V for BPOC, and I'm thinking to myself, and I'm starting to think in terms of hoping and praying, right? Well, I can move my stop to a break even, but what happens if it comes down there? See, I'm already in the mode of hoping and praying, and the markets don't pray to the same gods that we do. It doesn't care about your hope and prayer. And so that's what's signaling to me. I need to stay in the scalp. Why? Because this area is not valid for looking at a target because we're not in a rotational market condition. We could move into a rotational market condition, and the area I went short in has a high probability of moving into market condition, but it's just a probability. It's just a possibility. The other possibility is it moves right through it again. And the chances of it moving into higher again is higher than in a rotational market because we're not already in rotation. We're already in imbalanced market condition higher. Lessons learned, my friends. Lessons learned. And this is what I'm trying to demonstrate here. I'm not trying to demonstrate perfect trading. I'm not trying to demonstrate, oh yeah, look, I can trade the markets. This is all about demonstrating how to practice, how to become a professional in this industry. Not a professional as in, oh, well, I can go over Wall Street and go trade over there. No, professional within our industry and the retail industry side of things, because it's different from institutional trading. It can be similar, but it's still very different because institutional traders, they don't care about being right. Retail traders have to be right because if we're wrong, our stop is hit. And we get our stops hit too many times, we blow up accounts. So in some sort of sense, we have to be right. Institutional traders don't have that context. And if that's not true, Vito, and you're here, please correct me. Why would I ask Vito that? Because he was an institutional trader. On the pits back in the early 90s. So now we're coming off of the high volume, right? Coming off the high volume here. We have our area beneath us here. I'm going to do this again. I'm going to take another stab to the downside in here, even though I'm going against the short-term trend. I'm nervous about this position. And that's one of the reasons why I'm taking it, because this is one of those positions that I don't yet fully trust. But how are you going to know if you're going to trust something unless you do something? And if you treat sim and live the same way, so if you treat sim and live the same way, you can sim these things and still get all of the benefits of a live market. Okay? And I feel about this position the same way that I feel about the last one. Why am I back in it again? Because I scalped the last one. And to get into this area again, right? I wouldn't be in this live. And so I'm not practicing the same way that I would do live, which is a good thing because I'm practicing this to say, okay, is this one of those positions that I want to be taking in live? Do I want to add this to my repertoire? Or when I see this type of market condition, because we're not rotational, I shouldn't be trying to call highs, right? If you're not rotational, you shouldn't be calling highs. Why? Because if you're not rotational, you're doing something else. And right now in the 30-minute perspective, we're trending up. And so I'm trying to call a top here. But I'm in an area. And so what works more? Market condition or area? And the reason why I'm nervous about this is because market condition to me has always been the trump card. The market condition right now is up. And so I'm trying to fade it up. But are my areas, and I hate to say it this way, but I don't know how else to say it. Are my areas that good? And I'm not saying that to sound arrogant. I'm not saying, oh yeah, look at me, you know, I'm just this wonderful trader, blah 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 blah. No. What I'm saying is, what is going on here? Why do I have this here? I don't want this here. There we go. I want this here. What I'm saying is, regardless of market condition, do I just trade my areas? Because I have that much trust in my areas because my areas are really that good. Does that make sense? There's a difference between the two. One of them is coming from a place of arrogance. The other one's coming from a place of curiosity, from a place of I'm in too late here because I didn't see it. I didn't even see the setup because I'm too concerned about trying to go short out of this area. We came right back down into my area again. Why am I not going long? If we're not rotational, and I'm looking at this area right here to hold on the downside, okay? But it's not holding on the downside, it's holding on the long side. Why am I not buying it? If we're already directional on other time frames, why am I trying to short and stuck in the short of trading this around this particular area here when I have this area here, which is my most important? Why am I not going long off of it while my other time frames are telling me long? See what happens when we start to question or when we start to move into and just testing and saying, okay, I'm going to be willing to do this. This is where we get the more information. And everything on the 240 is telling me long. Everything on the 60-minute is telling me long. Everything is telling me long on all time frames, and yet I'm still trying to short this area when right here it was screaming at me, take potential long positions. And watch, the short would be stopped out. Now, just out of curiosity, is this type of analysis helping anybody? Is this confusing you guys? Is this helpful to you? Is a demonstration helpful? See how the high volume came in here at the high right here? Anticipate the high to break. I'm breaking the highs a little bit. I'm gonna go ahead and move this stop up. Lock in 80. Holding this area with the high volume. Anticipate that area to hold. Coming back up and testing the highs. It's not holding. I'm gonna move the stop up a little bit more in case it starts crashing back down again and this area holds as a resistance. I can always get back in and retest down here. But I don't want to take the risk in the position because the market's not doing what I would anticipate it to do right now. I'd anticipate it to start moving away from this area more rapidly than it is. But then again, though, look at the high volume here. There's your rotation in the high volume here, from here to here. And that's exactly what we're seeing is that rotation into here and here. And so do you really want to be more aggressive on your stop or wait for the rotation? And if you're waiting for the rotation, just a break even would be fine. You didn't have to move it up that high. Let's see. Vote for Nate. This is very helpful. Good. Good. Thank you for the feedback. I appreciate that. At least I know somebody's here. And now the price action to the upside. And let's see if we get the momentum up there. What is this line here for? I'm not quite sure. Why do I have that line here? What am I looking for? What are you associated with? I have a feeling you're not associated with anything. Oh yeah, you are. Value area high. Okay, perfect. We're good. We are good. We are good. We are good. Let's see, 10:01. It's only 10:01 on this particular day. Geez, I feel like I've been trading forever, and the market's only been open for 31 minutes. Craziness. Craziness, man. Let's see, are we going to get back down to the 0675 area? I don't know if we are or not. I don't think so. I do not think we get back here into this area. We may, but I do not think so. Break into value high, entering long after retest. Good long entry, in my opinion. Yeah. So, in that context of the long, right, that I just took, here's the thing, right? We're not breaking lows. We're not making lower lows. We're not in a balanced market condition on the 30-minute chart. Taking a short up here is the right thing to do in a balanced market condition. If you're not balanced, you're trending. Why in the hell am I looking for this area to break down here when we're to the downside? Why in the hell am I thinking that this market up here is going to come down and move lower and a trending market condition to the upside? We're imbalanced market condition higher. We're not in value. We're not in balance. Imbalance, anticipate it coming off the unfair highs and moving down here in short 100%. But we're not in a balanced market condition. We are in an imbalanced market condition. And so why I didn't see the long and I only saw the short, I don't know. But this is where perception comes in. We can only trade what we see. And wherever our perception is going to determine what we see. And so my perception there is short, right? I'm not seeing the long. That's an issue because I'm only perceiving to the short side because I'm still perceiving balance, even though it's not balance. We're in a trending market condition to the upside on multiple time frame charts. We're balanced on the daily. We're imbalanced on almost every other time frame. I like Delta here. Delta didn't do me any favors there, so just get me out with a break even. It seems like I like break even trades. got into this position a little bit early. So I'm going to have to manage myself out of this one a little bit, I think. But that's okay. We can do that. Because that's only a $550 risk. We're still up on the day if we take it. I'm going to take a 600 actually. A little wide for a scalp, but that's okay. I'm not anticipating taking that full hit. This is basically the market just comes against me, right? I want to give this market a little bit of room here because I'm not in the best area of entry here. I got in just a little bit low. I need to be in here above the 50 and a quarter. Above 50 and a quarter, this position makes a lot more sense. Where it's at right now, not so much. But I'm going to hold on to the position because if it comes down here, I want to add into the position. If it comes down here into this area, right in here, I want to add into the position. In fact, I want to add into the position right about here. There. Now let's see what it does. All right. Coming down a little bit, a lot of high volume up there. We got some high volume down at the low too. We might come down and test that and possibly break the low. Got a little bit of delta here, but anticipating a continuation to the downside first and test the lows before we go up, if we go up. A lot of strong delta on this bar too, so we may not go back up. Now let's look. Where are we at down here? 792. It's a little too high for my liking. So let's go ahead and get out with 4. Where's my high volume? I'm anticipating it to test up in here if we come back up again. That's a big if. This is the area that I want it to hold, is right here. So let's see if it holds this area or not. I'm going to take an expense on this. Come up here, the rejection, come back down and break the low. And there it is. Yeah, I should have done that a little bit differently. But this is all part of that process. So what happened in the context of this? First of all, I tried to go long below the close of the I tried to go long below the close of the 4-hour chart. Do not do that. 59 and a quarter. That's where I was saying I got into the position a little bit early. Okay. 59 and a quarter is right here. Right here. And my first initial entry when I put this on, it was actually designed to get in when we were above that area. Okay. And I got in below that area. Didn't mean to. I was trying to anticipate a break and not get slippage and caught myself. Okay. That's the first thing that should have told me I don't want to be in this position. I should have just gotten out of it instead of hoping and praying it was going to go in direction. Okay. The second issue that was in the context of this position was coming in and coming down with this dark, deep delta through this area here. Okay. When we got through the open of the 24-minute or the 240-minute chart, okay, when we got through that open, excuse me, through the close, we got through the open of the daily chart as well at 59. Okay, so the open of the daily was at 59. You got the close of the 4 hour at 59 and a quarter. Okay, should not be long in that area at all. And even down in here on the next test, we shouldn't have been long down here either, because you're still below those areas on your 240-minute chart. So getting in there, I anticipated the break so I wouldn't take slippage, and I added to an overall losing position. And it's not losing because of an expense, it's losing because I shouldn't have been in it in the first place. And I'm about ready to do it again, too. About ready to compound the mistake. Because everything inside of me is screaming long. Why? Why am I missing out on that one little detail? This is what it means to fiddle in the middle. Don't fiddle in the middle. And this is the middle. And let's see here. Where's the close out of this bar? 58. This is the middle. And don't fiddle in here. I'm not saying that's the middle. This Vito isn't here to help me align with that idea. What I am saying is that's one way that I'm interpreting the middle right now. And I would have to say that he is probably not wrong in that context. Interesting. It's an interesting day. And I don't like being up 1,000 and then turning around and giving all that back either. It doesn't sit well with me. It does not mean that I'm going to come in here and revenge trade and try to get my money back, right? It means that it's time for me to focus and to intend. What's my intention? My intention is to be profitable on the day. So if I want to be profitable on the day, and I'm only up $34 right now, which is basically break even, not profitable. That's not even Starbucks money for the week, right? How do I turn this around and become profitable on the day? I really want to be long here. Really want to be long here. Am I going long here? I'm fiddling in the middle, so I'm testing. I'm testing my own idea. I really want to be long in here. Really want to be long in here. But my long entry is below the close. And as long as you're below the close, you're fiddling in the middle. Okay. Excuse me. Sorry about that. I hope I didn't blow anybody's eardrums with that. Yeah. And this is why we don't want to fiddle in that middle. If this is really the middle. Because this is going to continue down, and it's more than likely going to test $66.5 to 50, 30,000, 66.5 and 50. This is good. This has the propensity to come way down here. Way down. And you know what I'm going to do? I'm going to stay in this, and I'm going to hit forward. Going through VPOC, or through VWAP, excuse me. Continuation down. Let's see if we hit my area I was just talking about. Let's see. Oh yeah, we just traded. We traded right through it. I mean, completely through it. We're already down. Oh wow. So I'm down $2,200 in the position now. What time is it? 10:26. Ah, I need to move forward. There we go. That's why I missed it. Okay. And now we're now we're in a rotational market condition. Now we're rotational. Now we're getting into an area of importance. Watch this, guys. Watch this. I'm going to show you how institutional traders get themselves out of trouble. Because they have counts that are designed for this. Right about there. And we're going to put a TP right up here. And we're going to drop that TP down just a little bit. Right about there looks good. We've got to get through 93. If we get through 93, that TP should be hit. There it is. That's how you go from a $2,000 position negative into a profitable position on the day. have been much better for me to just take out the position itself, right? And um reversed it when I was like, this is going to go down. And even, where I was saying it was going to go down to of the 30,069 area, I would have made a heck of a lot more money by doing that, right? But I was still down over $2,000 in the position overall and came out with it with a $314 revenue. And what did I wait for? Wait for it to come into my area and just start buying. And I was in with like 74 micros. I could be in 120 in my evaluation. So don't panic. Even if the market goes way against you, just don't panic. That's all it boils down to. And don't fiddle in the frickin' middle. Damn it. Because check it out. Check it out. I want to show you something. See? I fiddled in the middle here, right? Up here and down here. Down here, one of the two. Down here. Okay? Check it out. When a market finally broke down, it tested into the high volume above this area. And it already broke through the area. There's your short. And where you're anticipating it to go to, where's that short from in that high volume? 162, it's 100 points down to the target I was looking at, which was a hit here on this bar. Right here in this area, right here. There we go. Break into value area high, entering long after retest. Good long entry, in my opinion, yeah. Okay. Well, any questions? Any comments? Any concerns? So rude. So freaking rude. Today I had the makings of an amazing day, and I totally jacked it up. Like, completely jacked it up. That's okay. We live and we learn, right? It's the whole point of practice. But you're going to believe that in the afternoon today, I'm going to go ahead and replay this day. Because this is a great day. This is one of those days that's not rotational at all. And being able to practice a non-rotational day and being able to have that clarity, even though I was in the long and I stayed long, to be able to have that clarity that it's going to come down and why it was going to come down and that it did go down. Be able to define some sort of middle that we shouldn't be in, right? Rejection from previous day on VPOC, exactly. Yes. Yes. See? Here, hold on a second. Let's see here. Wait, where am I? Hold on. I actually have rejection from previous day's value area high. Right here. Right at that value, that volume node right up here. At the high. Is what I have. But you got to trade what's in your charts, not what's in mine. Just like I can't trade what's in your charts. Yeah. I mean, as soon as I said, this market's going to go down, I should have just reversed the position, but I was kind of annoyed with myself for going long below the open or below the close of the previous bar in the 4 hour. And I'm just like, man, you know what? I'm breaking my rules anyhow. And so I just wanted to see what it was going to do. So I sped it up, got myself out of the position without an expense, but it is what it is. But that's how market managers or money managers, that's how they deal with their expenses in a lot of cases. Just trade out of them with the inventory as price action is coming down into another area. And I waited until my lowest area, my biggest pain point, right? And then I started buying into it from that greatest pain point, and buying into that led to price action moving back up into a pullback from that area, anticipating buyers to step in high enough to get you out of the position without taking an expense. It's a way of managing your position. And that's why I use very low inventory when I could be in 120 lots of micros in my evaluation. I never get into 120 because I can always use that inventory to get me out of a bad position instead of trying to load up and go full port into positions. Two different ways of trading. I don't use inventory to speculate. I use inventory as a defensive mechanism. $53.5. What happens around 53? And I'm still trying to go long here when we're below the open of the 4-hour chart. Still haven't learned my lesson. Not only were we below that, but below the open too. And now we're coming into the lows at 23.5. Now will be a reason to buy at 23.5. So let's go ahead and see if we can get back above 23.5 here. Nope. Price action is just going down, doing exactly what I was anticipating it to do here in my plan. And I'm stuck on longs. See, this is what happens when you lose the flow of the market. When you lose flow of the market, stupid stuff like this starts happening. Now our next area is 659.5. Expecting price action to get down to 659.5. Let's see if it does it. Looking for 659.5. There's 640. She did it all right. She did it. All right, so what do I have an area below me? Do I have an area below me where I can get out of this position? Not right now, I don't. Jeez. What am I down right now? 2,000. Where do I try to get out of this position at? I could right now, but it's tough. It's not going to go up this far. I got to get below this high right here. And even then, I'm pushing it. This may not come back up and get me out. I'm pushing it right here. I need to be right about this VPOC right here for an entry point to be able to get out of this market right now. Nope, there it is. All right. Well, there, see, showed you how to do it twice. You're down $2,000 or more in a position, get out of it twice with a break-even trade using inventory. And both times, I was only down $500 to $700 in the positions when I'm like, oh, wow, this is going to go down here. And both times it did, and each one of those positions would have been $2,000 had you held them. So, you know, you're up $448 instead of $4,000. I'm going to replay this day. I need to replay this day. I need to practice this day and this type of market condition because this is a different market condition. And this is a great example of a day to trade. So on that note, I'm going to go ahead and end the stream here for right now. And I'm going to be back later on this afternoon in order to replay this day again, because this is an extremely, extremely great day to practice on. There's a lot of stuff going on this particular day, and it's just a really, really, really good day. Yeah, I like it. I like it a lot. All right, guys. On that note, thank you so much for being here, everyone. I truly appreciate you and your time. And I am going to be back around 3-4 o'clock today to do some more practice. Thank you so much, everybody. Truly appreciate you. Appreciate all the support. Thank you for all the follows. Thank you for all the comments. Thank you for all the questions, any subscriptions. Thank you guys so much for all the support. Truly appreciate each and every single one of you. Jerry, you take care too. Yep, peace out. Absolutely. I'll be back. And until next time, as always, be safe, be kind, and know that you are loved. Because I love you guys. Thank you. Enjoy.